Yeah, I hear you. Okay, sit tight. Sit tight. All right, I'm sending you the link. Give me a couple of seconds. All righty. All right, bye. All right, let's get that. Good morning, and how are we today? All right, there we go. All right, phones. Almost there. And that's all she pays every month until she gets it paid off. She got. Come on, come on. All right, live. I think I got it. And dun, 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 dun. There it's right there. All right, I think I got it. I think I do. Get that out of the way. Out of the way. Good. Okay. All right. I think we got it. Hold on one second. Let's turn some of these things around. There we go. And there we go. And there we go. All right, I'm going to stop this noise. There we go. That's better. Okay, that works. All right. All right. All right. Working. Everything's working. All righty. I figured we're going to do a little bit different today considering the market is not open and I want to share the wealth, share the knowledge, and see what you guys think. What's your input? Okay, so what we're doing is, for those of you that are new, never been here before, my name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. My goal is simple: a simple, safe, predictable, consistent 1% per week. And if you're good with math, we all know that's over 50% per year. So if you could play along, questions are going to be prioritized to the morning trading group because you guys, that's what we're here for. And it just so happens that, hey, we're here anyway, so let's share the information with everyone. And we are going to be a little bit restricted on some of the information that we share, only to be fair to those that are actually paying for it. And those that are here want to see what's going on, see what we're doing. That's what we're looking for. Alrighty then. We're going to look at my account and we're going to look at what are we doing on a normal everyday basis. So that being said, let's get the ball rolling. Let's take the questions from the peanut gallery. What do we have over here? All right, so you guys, let's take a look. We have no questions so far. Fine. But what we're trying to do is kind of bring the two together. Why are people paying for this service, number one? And number two, is it something that you might be interested in? The only reason I'm asking that is, well, is the information valuable? Does it make sense? Does investing in good quality companies getting a 1% every single week make sense? All right. So if you were such a successful trader, why would you need to sell your service? Well, good for you. Great question. I love it when negative people come out and try to automatically throw mud into the soup. Well, here you go. I'm at a point in my life where it really doesn't matter to me one way or the other what you think. I'm just passing along information. If you like it, great. Join us. If you don't like it, if you don't find it valuable, don't. It's actually that simple. Being successful at trader has nothing to do with why I'm sharing information. I'm sharing information so my children, grandchildren, great grandchildren will have some reference as to what to do with money. Okay. In a world of high frequency algos, dark pools, and retail crowding via social scanners, how do you source what asymmetric information or timing edges that aren't already arbitraged in a millisecond? It's not what I'm looking for. Okay, you're looking for something totally different than what I'm doing. And don't get me wrong, I appreciate the questions, I really do. Okay, I'm 62, I'm retired. Everything I do has to make sense, it has to be safe, it has to be predictable, and it has to be profitable. Point blank. Speaking, time is up, buddy. Yeah, thank you, Dalton. Excellent. Oh, exactly. I appreciate wait, what is this? I appreciate you saying that. All right, thank you. Okay, Money Main. No, you are grifter and attempting to scam your low amount of viewers out of their hard-earned money with promises of making a quick buck. Well, it is interesting. I probably just stick to the night ones because apparently the people in the morning aren't as nice as those at night. Number one, I didn't ask for any money. That's number one. Number two, I'm giving away the information for free. Number three, I'm looking for something totally different than what you're looking for. So if you don't have something nice to say, you can just leave for all I care. Let's keep on going. Who's here? Who's here? Who's here? All right, who do we have? Cincinnati. Oh my goodness. Good morning. Beverly Harris, you're new. Good evening or good morning. Shorten, good evening. Cam, how are you? Let's see what we have over here. Do we have anything positive to say? Okay. Dr. Corey. A lot of echo. Yeah, I saw that. Discipline. Good evening. Gen Xer, how you doing? Tolkien, New York. Good evening. Yep. Kay, Jason, Manuel, Enzo. Good evening. Oh, good morning. I'm so used to doing this in the evening. What's up? Who's your football? All right. Good morning. What the heck are you doing? Melissa, what I'm looking for is a simple, why am I getting that reflection? Reflection. That's the one right there. Oh, why is that? There we go. Got rid of that reflection. All right, what am I doing here? I'm showing how I invest for weekly cash flow. Simple, safe, predictable, consistent, 1% per week. Yeah, I know that's over 50% per year. That's what I'm looking for. Now, I'm retired, so my trading strategy is a little bit different because I don't have the luxury of being wrong, which means the trades that I do have to be safe and predictable. That's it. Safe and predictable. That's what I'm looking for. All right, so I like the money dude. He's fun. And would you like to buy something? No, I don't want to buy anything. It's early. Yes, Phil Collins, it is. What kind of minimum percentage do you look for each trade? 1%. Now, the funny thing is, when I say I'm looking for 1% a week, and you asking me what I'm looking for means you're not really paying attention to what I'm saying. But okay, I'll play along. We appreciate the morning. You are here. Thank you, thank you, thank you. Weather, then stairs. Okay, not quite sure. I lost 1,000 last week, couple of weeks. Okay, Phil, I'm not quite sure what you did. Hard for me to give you some kind of input when I don't know what's going on. Teach us on how you invest. We're going to get there, Kyria. Okay, I got to finish answering these questions. You should mirror your camera because all the words are backwards. Yep, I understand that. Truth, keep the good work going. Thank you, Teeny. Thanks for the valuable information you got it. Remember your camera. Okay. If you know how to remember the camera, I'll be more than happy to do so. Okay. The selfie camera on an iPhone does not have the ability to invert its picture. So I've been doing this for a long time. If you have a way of inverting the picture on the selfie camera on an iPhone, let me know. Okay. What else do we got? I was gambling on Hood and Netflix. Well, great. Let's pull it up. Hood and Netflix. Well, number one, Hood's not on my list because it's not over 20 years old. What I'm looking for specifically, for those of you that are new, I'm looking for companies that are consistently profitable. Now, when I say consistently profitable, it's probably a little bit different than what you were thinking. Okay? Companies have two choices. They can take the profits, give it back to the investors through dividends. That is capital. That is what do you call it? An income stock. Companies that actually give you money. It's an income stock. Now, a growth stock, they take their profits, put it back into the company for capital growth. So if you're looking for capital growth, you're definitely in the wrong place. Terribly sorry. I'm 62. I'm not looking to grow my capital. I'm looking to get cash flow. Not just cash flow, weekly, consistent cash flow is what I'm looking for. If you're looking for cash flow, if you're looking for cash flow, great, wonderful. If you're looking for capital growth, you're definitely in the wrong place. Now, don't get me wrong, I could sit in front of my computer and make more money, but that's not my interest. I'm at the point now where I want to pass along my information that I have learned over my years of investing. Now, I'm not asking for anyone to buy anything. We're all adults, we know how it works. And you will not hear me pitch you at all because I have no interest in pitching people. LJ, good morning. Love to see you in the morning as well. Well, we're seeing what we're going to do about that. Carrico, thank you. Uh, MC Construction, Deconstruction. Good morning. All right, what else do we have? What companies you have for this week? Sit tight. You up early, Mr. James? Yep. How about Intel and Apache? We'll take a look at it. Hold on a second. I want to back and take a look at what he lost money on. Um, Last week, BTU was great, but went down. I still have a bunch of shares. Dr. Corey, hold on. Let's take a look at that one right now. What was that one? BTU. BTU. Now, I jumped into BTU last week also. Well, let's zoom in and see exactly what we're looking for. Before we do that, let's go through the whole rigmarole and see what we're looking at. BTU, Peabody Energy, here's the high, here's the low, here's where it was, here's where it is. She shoots up, pulls back, shoots up, pulls back, shoots up, pulls back. Okay, I want to zoom into that area to find out exactly what went on. Let's get this out of my way. Let's go to here. Let's get this out of here. I don't need that. All right, so let's zoom into BTU and take a look at the last 30 days. So the last 30 days is going to give me a good idea of where do I think it's going to be. All right, or where do I think it's going? All right, so last week we were at 36, shoot up to 40, drop down to 33, shoot up to 38, now we're sitting at 34. Okay, well, I jumped in last week. Last week was right about here after the drop. All right, so I jumped in here, and hypothetically, let's see what I bought. I got so many I don't really remember. BTU, it's not there. It's on a different account. All right, so I got 7 different accounts. It's not really going to help me out looking at that one. So we're not going to. But anyway, where did you jump in? You jumped in at 37.53. Okay, so this week, 37.53, I would probably, we are here. I'd probably do the 36s or the 36 and a halves. Maybe the 37s. But look at the 36. The 36 is paying 38. Now, you're in it at 37.53 if you jumped in and sold the 36s, which is right here. Let's zoom in a little bit tighter. Okay? Here's 35 right here. 35.50, 36, and it's dropping. How far is it going to drop? We don't know. But if you did the 36s, you could pick up your 1% still and keep your eye on it. Because as it goes down, the value of the option also decreases. But if you sell the 36s, you got to be paying attention because if it bounces and goes back up, you can get caught with your pants down. That's never a good thing. Oh, shit. I didn't send Jacob. Damn it. Give me a second. Okay, hold that thought for 1 second. All right. Tell him I said sorry, just sent him the link. Just sent it to him. All right, Jacob's on the other line. He didn't send me the link. All right, so Jacob's got the link. All right, so anyway, Doc, I don't know if that makes sense to you, but if that's what you're planning on doing, if it was me, that's what I would do. Because I look at my account twice a day, once in the morning, once at night. As it's dropping, I don't mind selling the 36s. Because what do we got this week? This week we got 4 days. Can it bounce and retrace, go above 36 by the end of the week? Yeah, it could. I wouldn't do it if I didn't look every day. Now, if I'm too busy, I'm not going to do that. I would do a 36 and a half, 37, 37 and a half, but as you do that, the numbers do get smaller. So think to yourself, what is more important, cash flow or being right? I prefer cash flow. So yeah, me personally, I do the 36s, and as she dipped more, I'd let it expire this Friday, and then next Monday, I'd pick a totally different number because we don't know what's going to happen Tuesday, Wednesday, Thursday, or Friday. We have no idea what it's going to do. So in that case, I actually want to have the money coming in and being in that position. I don't know, Doc, does that make sense? All right, Dave, good evening. LTTBT, good morning. Jared, good morning. Max Miranda, good evening. Soul Riding, cool. Raymar Glover, cool. LT, good morning. I see you in the morning. All right. Robert, good morning. Chad, Vladimir. Safe 44, good information. Thank you. Um, Ben Seymour, good me. Kelvin, how much are you making weekly rough estimate? My average is 1.4%. Okay, so think about whatever money you have. You got 100 grand, 1.4% would be 1,400. You got a million, 1.4% would be 14,000. It's simple math. And no, I don't give out numbers because it sometimes can be intimidating. Okay, because I've been doing this for 30 years and it's not fair to people who just started out a year or two or three and they get discouraged saying, well, I only got 20,000, I only got 30,000, I only got 50,000. It doesn't matter what you're starting out with. 1% is 1% no matter which way you look at it. And gaining 1% every single week will double your money in 16 months. I don't know where else does that, but hey, if it makes sense, okay. If it doesn't make sense, well, that's fine too. But what does it mean to you guys? Okay, what do we have for questions over here? Got one question over here. Mike, thank you. We'll take care of same. All right, Mike, thank you. Who's your football? Yep, we already did that one. All right, so let's keep going with the questions. What else are we looking at? What companies have we for this week? Well, we got the Dividend Kings, the Dividend Aristocrats, Dividend Champions, Dividend Contenders, whatever's looking good. So for what you're saying, well, I throw everything into a, what do you call it? An EX dividend calendar. Well, that tells me who's paying dividends this week. Okay, take a look. We are in the 16th of February. It is whatever freaking time it is. What time is it? 9:24 a.m. Normally the market would be open up in 6 minutes, but today there is no market. So I figured why not? Because I have a ritual which I do every night and every morning. Monday mornings, I do my show. I teach people what they're doing and I walk people through what they're doing. Okay, that being said, today's the 16th, right here. Tomorrow we have 57 companies paying a dividend tomorrow. Okay, the EX date. Sorry, the EX date is tomorrow. Wednesday. Oh my God. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Let's say it's about 30 on Wednesday. Thursday, it looks like there's about 15. Friday looks like another 25 or 30. That's just this week. But then look at next week. We get all this next week. Oh, 79 on Friday. So we actually have hundreds of companies to look for. Now, why am I looking for dividend companies? Companies that pay a dividend, companies that share their profits. Because I'm retired. My income has to come from my money. So, yeah, I've worked 5 decades. My first job was in 1974. I retired a couple of years ago. So, all the money I've accumulated in my life now has to pay my bills. So, yeah, 1% every single week pays all my bills for me. Why am I hearing noise in the background? Uh-oh, some noise going in the background. What do we have? Here we go. Mute that. All right. So you guys got questions. You guys are paying to be here. So talk up, speak up, look at anything you want to look at. All right. So ZXZXZXZ. I hope that's understandable. Okay. How much am I making weekly roughly? Okay. So if you have $100, 1.4% is $1.40. You got $1,000, 1% is $14. Okay. So 1% is 1% no matter which way you look at it. Got a couple of questions. Question number one. Recording, okay. All right, thank you. What do we have? That's coming tiny. Question number one. Ooh, General Motors, Delta Airlines, and Win. All right, Mr. Steve, we'll take a look at that. Delta Airlines. DAL. Okay, so anyway, back to the question, what stocks are we looking at? There they are. Every little green dot represents a company that is sharing its profits. You, if you want to, being a stockholder, you are entitled to a portion of the profits. So you got to decide. Do you want the profits or do you want those profits thrown back into the company for capital growth? Because we're all at different phases in life. I'm in the retirement age or the golden age. Okay, I have no desire to go back to work. I think 5 decades is plenty. Okay, you have an argument about that? Tell me why you think I should be working more than 5 decades of my life. I'm willing to listen. Not that I'm going to do anything about it, but people sometimes like to voice their opinions because they see someone making money and it doesn't work anymore. Well, I've already put in 5 decades. Go Hard 84, how are you doing? Grace, good evening. Del May. Del May, how are you? Lando, NUS. I have no idea what NUS is. So let's take a look. What is NUS? NUS. New Skin Enterprises. Oh, now, number one, I don't do monthly options. Okay, I look for weekly cash flow, not monthly. Okay, think of it this way: monthly options, once a month, that's 12 times a year. Now, if I'm making 1% to 2% for every trade that I do, well, that only comes to 12 to 24% at the end of the year. Where 52 times, remember, 1 to 2% every trade, 52 times weekly, that's 52 to 100% or more every year. So you decide monthly, 12 to 24%, or weekly, 50 to 100. I prefer 50 to 100 personally, but if you want to do monthlies, great. I'm not going to do it. It's a waste of my time. February, March, June, September, that's a monthly option. Not only that, you have to figure out where is the stock going to be in 30 days. So today's the 16th. There you go. That is 30 days. We started at 1175. We dropped to 10, shot back up to 11, dropped back to 10, back up to 10 and a quarter, and then gap down to 8 and a quarter. Now, tell me, where is it going to be in 30 days? That's what a monthly option is doing. You've got to figure out this movement here, okay? Down, up, down, up, down, up, down. You got to figure out what that's going to do in the next 30 days. I don't do monthly. They're a pain in the butt and they just don't pay the same amount of money. So I don't do them. So weekly options only. All right. What else do we have here? Ed Mayer, Tricky Rick, what's going on? Kevin Rucci, Jay Rucci, what's going on? You doing the wheel method? No. I very rarely do the wheel. Now, don't get me wrong, the wheel method does great. Wait a second. That was the morning opening bell. Why is the morning opening bell going if the market's not open today? Isn't that weird? You just heard the morning bell. Anyway, no. Now the wheel strategy does work great. I don't do it too many irons in the fire, so to speak. And the strategy that I am showing you or giving to you, because I'm not asking for anything in return, what I'm giving to you was created for my 9-year-old daughter. Because back in 2008, my 9-year-old daughter says, "Daddy, what are you doing? Can you teach me?" So my 9-year-old daughter wants to learn how to invest in the stock market. Well, great. Well, now I have a challenge. It's got to be simple. She's only 9. Safe. She's only 9. Predictable, consistent, and no way for her to lose. That's very important for a 9-year-old little girl. Because I don't want to sleep on the couch. And for you guys, you know exactly what I mean. Okay, if I'm wrong, if my daughter starts crying, if she loses her money, yeah, I'm the bad guy. I'm sleeping on the couch. No, simple, safe, predictable, consistent, no way for her to lose. So the trading strategy, 5 rules. Are you ready? Now these rules are simple. Number 1, don't buy anything you don't want to own long term. Kind of makes sense. Number 2 is even more stupidly simple. Number 2, never sell at a loss. What would be the purpose of buying this thing at 836 and selling it for less than what I paid for it? That makes no sense. Rule number 2, never sell for a loss. Because if you followed rule number 1, never buy something you don't want to hold on to, well, rule number 2 is like, okay, that makes sense. Rule number 3, and this is a challenge for almost everyone I've ever talked to. Rule number 3, make sure the company's consistently profitable. What I'm looking for seems to be totally different than what you guys are looking for. I want 2 decades of consistent profits. And don't tell me it's not hard to find, because there's 10,934 companies as of last night. Because we check every single week, how many companies are there in the stock market to invest in? As of last night, 10,934 companies. Out of all of those companies, about 300 are consistently profitable. What does that mean? That means they make more money this year than they did last year. They made more money last year than they did the year before. Every single year, they have to pay out more and more and more and more profits. Okay? Cream of the crop, Dividend Kings. 5 decades. Imagine that. 5 decades of increased profits. The list is free. Go to Google, Dividend Kings list 2026. Boom, it shows up. List number 2, the Dividend Aristocrats. 25 years of increased profits. Google, Dividend Kings list 2026. Boom, it shows up. Dividend Champions, Dividend Contenders, anything on Warren's list. That's 5 lists that will give you about 300 companies that are consistently profitable. If you can make 100%, why don't the hedge funds do the same? That's a great question. Why don't they? And why would you do a hedge fund in the first place? Think about it. A hedge fund, it's a 220 split. Do you know what that means? Just to handle your money, you're paying them 2%. Just to handle it. And then
James,
they take.
There's a good answer for that question. Why don't hedge funds do this?
That is a good question. Wait a second.
By law, they're required to do certain things that, for their investors that are not part of this, so they have to do certain things that are more, I don't want to say by the book, not that we're not doing anything by the book, but they cannot do a strategy like this. And in order to scale something like this is difficult. This is a great strategy for a single investor or even a few people. But if you're managing tens of thousands of accounts, it's a lot different as a hedge fund. This is actually one of the advantages you have as a smaller trader to do something like this that a hedge fund can't, because you don't have certain goals you have to meet or certain SEC filings you have to do.
I couldn't have said it any better. Thanks, KG. Yeah, KG. He said it better than I could have said it. Okay, hedge funds are required to do certain things, and I wasn't finished with my hedge fund analogy. If you put your money in a hedge fund, hey, nothing wrong with that. I'm going to open my own fund one of these days, but mine's going to be a little different, and mine's going to be private. It's not going to be available to the public. Sorry. But a hedge fund, number one, you're paying 2% right off the top just to handle your money. Just to touch your money, you're paying 2%. Then hedge funds want 20% of the profits. Why not just do it yourself? You got 2 choices and only 2, and don't think that you don't. Heads, tails, up, down, right, left, hot, cold, 2 choices. All right? Do it yourself or give up accountability, let someone else do it for you. It's plain and simple. But he's right. Hedge funds have a whole bunch of tape that they have to run through in order to be able to do anything. And I have no desire to do that whatsoever. What I'm going to do is bake kind of the same, but a little twists. I like riding the edge of that, legal, illegal part. I like the gray area. Everything's black and white. No. I like the gray area because it's legal, but it's right on the edge. I like doing that. I'm not breaking any laws. I'm doing what is legal. So I'm taking what the law is, what I can do, what I cannot do, and I'm going straight down the middle to make what's profitable and what works for me. Okay? Does that make sense? Was that Rams clips? Hopefully. Pagar, how are you today? 72 Mongo, good evening. Oh, good evening. I'm so used to doing this at night. I'm not used to doing this in the morning. All right, what else do we have? Miguel, thank you. Chunzo, did bro just say weekly options is safer? Only if. So I got to change that for people who really like to, dissect things under a microscope. When I say weekly options is safe, only if you understand what you're doing. If you don't have time to look at your account every single day, then no, it's not safe. Okay, if I decide to go brain surgery on someone, that's not safe because I'm not an expert at it. So practice, practice, practice makes you good at it. And if you're good at something, there is no risk. If you know what the risk reward is, if you've done it long enough, and if you're successful long enough, and if you've overcome every obstacle thrown at you, well, there's no risk there whatsoever. But if you've never done it before and you have no clue what's going on, then yes, it is risky. It's all in perspective and context. If you understand what that means, is where are you in this equation? Okay, are you doing weeklies on a consistent basis like I have been for the past 15, 16 years? Totally different story. If you're just starting out and you know absolutely nothing about the risk reward ratios, about weekly options as opposed to monthly or no options at all, well, then yeah, you have to eliminate the risk by consistently doing something over and over and over again. That's how you get good at anything. All right. So we're going to take a look at General Motors, GM. Ooh, maybe. Now, anytime I look at a chart, first thing I want to do is the 1 year chart. Here it is. The high of the year, low of the year. Where was it a year ago? Where is it now? Look at the motion. Up, down, up, down, up. It's turning right there. I love a turning point. Let's zoom into it and look at the last 30 days. Okay, 30 days ago. Here we are. We shoot up, pull back, shoot up, pull back. Now it's turning. I love this one. Who came up with this one? Mike. No, was it Mike? Who came up with this? Steve. Steve came up with this. Way to go, Steve. Check this out. 30-day high. You got your profit taking, pullback, correction, whatever you want to call it. 30-day high drops to a new bottom. 1 day, 2 day, 2 days up. I'm going to jump in on the third day. Okay, you can take a look at all my videos that I have done. I don't try to call bottoms because I'm not good at it. I don't try to call tops because I'm not good at it. What I'm good at is recognizing a 30-day top, which is easy to do. Where's the high? It's right there. Where's the low? It's right there. Don't make it complicated. Adults, you people want to make this thing complicated because complication feeds the ego. Simplicity is very challenging because you have to consistently remind yourself it's really not that difficult. The high's there, the low's there, that's where it was, this is where it is. Why make it more complicated than it needs to be? 30-day high, right there. Let's zoom in. Zoom in, right there. 30-day high, it comes down, new bottom, 1 day up, 2 days up. I like 3 days to the upside. So if tomorrow this opens up a little bit higher than 81.08, I'm jumping in. I'm actually going to write that one down because bitch, moan, complain all you want. I'm so old, I have to write stuff down. GM tomorrow. GM. Now, let's actually do a trade on GM to see what the numbers look like. If I do General Motors, am I going to get my 1%? Well, let's take a look. At 81, the 81s are going for $1.04. That's more than 1%. How do I know, you may ask? Well, what is 1% of 81? It's a group question. What's the percent of 81? 1% of 81 is 81. Isn't that weird? 1% of $81 is 81 cents. What is this paying? This paying $1.04. Where I went to school, $1.04 is more than 81. Hold on. Chad, are you an investor too? Yeah. Have you ever used the news tool on the sidebar? No. For short-term plays, yep. 81, Tommy Gunn, right on the money. Who hold XRP like I do? Now, XRP doesn't give any dividends. It's based on, don't get me wrong, XRP is great for what it is. If you're looking for what XRP is going to give you, great, awesome. I'm looking for weekly cash flow. XRP is not offering that, so no, I don't do XRP. Check out the tool if you have it, pretty neat. What would be the benefit? Nuh-uh. That's his name. Nuh-uh. Nuh-uh. What's the benefit of that tool? Does it allow me weekly cash flow without clogging up my time? I don't know if that makes any sense or not. But let's get back to General Motors. Number one, it's over 100 years old. It's a 100-year-old company. That means they've seen a lot of crap. They've seen World War One, World War Two, Vietnam, Korea. What was that other one? Desert Storm. Anything happening overseas? All that crap. They've seen it all. And what about stock market crashes? 19, 2000, 87, 2008, 2021, 2024. They've seen it all and they're still going. Over 100 years. They must know something. So let's do a covered call, General Motors, see what it looks like, and does it make sense? Out of everything I say, you need to ask that question. Does it make sense? Once you get past that, the second question should be, do I like this company? It's General Motors. Either you like it or you don't. And then number three, do I like this company at this price? So let's do one. First thing I'm going to do, pull up the option chain. If you don't know what the option chain is, a covered call is one of the simplest, easiest trading strategies there is. Okay, it is so safe that you're actually allowed to do it in your IRA. And the government does not allow you to do just anything in your retirement account, but they do allow you to do the covered call. It is a safe trade. That's why we're looking at it. So we're trading strike prices because any contract you need four things. If I buy something, I own it, it's mine. Now, if I want to do a covered call, I need four things. One, I need a beginning date, an ending date, consideration, that's the money that changes hand, and then four, meeting of the minds. That's a technical term for it. Meeting of the minds. It's an agreement between two parties, two adults, where money changes hands and agreement is made. I'm buying it, I own it at this price, 8108. Now I'm going to sell it. Here's the part where the contract comes in place. I'm going to sell it at 81, less than what I paid for it. So the person who's buying it from me is paying this right here. It's called a premium, just like the premiums you pay on your home insurance, just like the premiums you pay on your life insurance, just like the premiums you pay on your car insurance. It's an insurance policy. If you take a look at the actual definition of a stock option, it is an insurance policy to ensure that you don't lose money. It just depends on how you're using it. So we're twisting it a little bit to work in our favor. So if I buy it at 8108, I sell it at 81, I'm getting $1.04. That $1.04 is more than 1%. There you go, you're 1%. Let's actually do one of those trades. All right, I'm going to change it from single to covered call. And if you don't know what a covered call is, there are literally hundreds of videos online to show you exactly what a covered call is and how to do it. Mike, we'll take a look at Target in a little bit. SLV, Mike, SLV. Come on, that's silver, dude. You know that's going to be all over the place. But we'll take a look. Sit tight. So, General Motors at 81. Here we go. I'm going to buy the 81, which is right there. Okay, I'm going to slide down here. Change it from 10 contracts just to one so you get a good idea what one is going to get. All right, now we're going to hit confirm and send. Here's the order right here. I always encourage people to read it out loud. Can you finish your list of rules? G, get the fab. Yep, Wealth Wrangler, XRP is the future. Yep, 81. Oh, wow, I get all these answers. All right, I'm going to apologize now, only because I got 9 different platforms running at the moment. So I'm live streaming on 9 different platforms, which means I got a lot of questions coming at me at once. So I'm going to try to get to all of them if I can. So here we go. I'm going to buy one covered call General Motors first thing in the morning. Okay, what am I going to pay? I have no clue. Because as soon as the market opens, the numbers change. The equation stays the same. What's the purchase price? What's the sale price? What percentage is it? I ask 5 questions. What did I pay for it? What am I selling? What did I collect? Where's it at now? What does it look like it's going? Okay, so here it is. One covered call General Motors, February 26th. That means this option expires this Friday. Whoever buys it has between first thing in the morning when I sell it or when they buy it and Friday afternoon at 3:59 p.m. Because at 4 p.m. it becomes useless. So do something, don't do something. I love this two thing. Do it, don't do it. It's that simple. Flip a coin. Can't make up your mind? Flip a coin. Heads, tails, whatever. So the 81 call option, profit is 115. The investment is 7,900. Okay, don't bitch and moan. You got to put up 8,000 bucks to make 81 bucks. Here's the thing. Your money's going somewhere whether you like it or not, whether you agree or not. You put it in the bank, what do you think the banker's going to do? He's going to lend it out, he's going to invest it. However, he gives you a guarantee, 1% a year. Okay, maybe 2%. Well, wait a second, I've seen some high yield savings accounts up to 4.5%. If 4.5% tickles your toes, hey, more power to you. I'm looking for 1% every week. And I'm only invested in companies that I like. General Motors is over 100 years old. I don't think it's going anywhere. But hey, that's my opinion. So if I buy it first thing in the morning, 81.09, and I sell it for 81, and I walk away with over 1%, let's find out exactly what that is. We need the calculator for that. Calculator right there. Okay, let's do some quick math. Quick math. Oh, that came out too big. Why is that so freaking big? That's why. There we go. All right. Quick math. Pay attention to the screen. Profit is $115. Okay, it says it right there. Maximum profit, $115. What is it costing me? To find out a rate of return, you take the profit and you divide it by the investment. The investment is $7,985. Well, what does that come to? If you didn't know, 1.4% for 1 week. All right, so here you go. Buy General Motors. I'm not telling you to buy something. I'm just going through the exercise out loud so you can hear it. So I'm going to buy General Motors at 81.09. I'm going to sell somebody the rights to buy it from me anytime between now and this coming Friday, close of business Friday, which is 4 p.m. The right to buy it from me at the same price that I just paid for it. And for that privilege, they're going to pay me 1.4%. Now, if the stock is above 81 by Friday, I get all my money back. That's 8,000 bucks. If it is below 81, I keep the profit, 115, and then I sell it to someone else next week. That's why rule number 1 is never buy something you do not want to hold on to, because sometimes you have to hold on to it longer. The longest I've ever held anything is 18 months. And I did it on purpose because it was Walgreens. And before Walgreens went private, Walgreens paid me over 1% every single week for 18 months. So I bought it for like 10 bucks. By the time I was done, I sold it for 10 bucks, same thing I paid for it, but I got 1% every single week, which is over 100% return just on Walgreens, doing the same thing every single day. Should I put 50,000 into Coca-Cola? I know absolutely nothing about you. Seriously, nothing at all, other than you want to put $50,000 into something and you're asking my opinion. Well, I cannot give you an answer because I know nothing about you. I don't know your age. I don't know what your goals are. I don't know what your risk factors are. I have nothing. You want to have a conversation? Send me your phone number. I will call you. We'll have a talk. And I guarantee you, I promise I won't try to sell you anything. Just want to have a conversation. Okay, so that's General Motors. I like that one. Let's save that one. We're going to save GM because the numbers just look good. Okay. I'm going to save GM because the numbers look good. Did I write that one down? I did. 1.4 for GM. 1.4. Yep, I write stuff down. I'm actually that old. Okay, what are we looking at? Right here. Here it is. There we go. Right there. General Motors. The 20th of February. That's this coming Friday. The $81 call option. Okay, 115 is the profit, 7,900 is the investment, 1.4% for the week. That's it, 1.4% for the week. But the equation, does it make sense? Am I buying something I want to hold on to? Am I selling it for a profit? am I collecting a premium every single week? These are all great questions. Let's go back to the beginning, find something else, because we have a couple more to take a look at. All right. Check out the tool. Yeah, I've got that one. Uh-oh. Identify market movers for short-term play. Playing specific sectors extremely customizable. I'd like to take a look at that one for what you want to look at. Okay. LMAC AVGO. Wait a second. Isn't AVGO? Is that Broadcom? Ooh, I like Broadcom. Tommy Gun, Bank of America. I like that one too. Crystal Ball. How are you? All right. So that was General Motors. Now let's take a look at Delta Airlines. Okay, DAL. DAL. No. Now, I'm only saying no because that. Wait a minute. Hold on. $1.4 for today. Let's put that's today. What do we have today? That works. All right, back to where we were. Okay. Next on the list is going to be Delta Airlines. All right, so I said no to Delta Airlines only because here's the high and it's dropping. If you like it, look at this. Thursday was low, Friday was higher. So this could be right here. This could be where it changes place, where it changes direction, starts going up. Could be. Let's keep on going. Ricardo, you want that too? Cool beans. Joseph, thank you. T. Sharon, good evening. Cindy Richards, good morning. Mike Jones, Brian Kelly, what is your portfolio averaging? 1.4% every single week. Oh, Jimbo, what securities license do I have? Now, see, you're under the assumption that I need a securities license to buy and sell stocks. I don't. You need a security license to buy and sell using other people's money, which I don't do. So nothing you need to worry about. LMAC, Wi-Fi. Is Wi-Fi an actual ticker symbol? Oh, so anyway, we're putting Delta Airlines on notice because tomorrow, if it's higher, that's 2 days to the upside. Then on Wednesday, it might actually look good because here's your 30-day bottom, 30-day top. Now she's dropping until she's done. Stocks go two directions, up or down. It goes up until it's done going up. It goes down until it's done going down. Now, do we know where the top and where the bottom is? No, we don't. We just have to rely on this. Here's the bottom, plain and simple to see. Here's the top. Again, plain and simple to see. She was at the bottom, then she went up, now she's coming back down again. Why adults want to make it complicated is beyond me. Okay, remember, this was created for a 9-year-old. A 9-year-old little girl, this was created for. Daddy, can you teach me? Yeah, honey, here's the high. Duh, yeah, it's the high. Here's the bottom. Come on, Dad, it's got to be more complicated than that. It's not. The bottom goes up, then it comes back down again. It's actually that simple. A 9-year-old got it in 15 minutes. She was 9 years old. Stocks go up, stocks go down. That's all they do. You just got to buy them at the right time. Here's the bottom, 1 day, 2 day, 3 day. That's where I would have jumped in. I'm not going to give you no BS. I would have bought it down here. No. 1 day, 2 day, 3 days. I only buy 3 days up. Then you take that ride right there. Once it gets to the top, now she's coming down. Now I'm only looking for 1%. It could jump up 10, 15, 20%. I don't care. Okay, there's 10,934 different companies. I take 1% from this company, and when I get that 1%, great. The next one coming up, I'll jump on that one. And I'll just move only to good quality companies. If I get stuck with one, which I happen to a lot, is it a good company? Is it worth holding on to? That's you have to ask that question. So Delta Airlines is maybe for next week. Maybe. What's the third one? Third one, Wyndham Resorts. WYNN. Wynn Resorts. Now, this is another one of those fickle ones. Take a look at the numbers. High, low, was, is, down, up, down, up, down. What's going on right there? Does it make sense? Is this where I want to put money? These should be questions you ask yourself all the time. Who is this company? Do I want to feel, do I feel like this is a good place to park my money? Let's find out. Well, we know where the bottom is. We know where the top is. Now, if you take a quick look, the bottom, 65, the top, 135. Now, for those of you that are slow with math, that's a 100% increase. From the bottom to the top is a 100% increase. So what happens when a stock doubles? Profit taking. It comes down. Think about it. You buy something and it doubles in price. You got two choices. Take the profit or let it ride. Let it ride. See how high it goes. Well, guess what? She starts coming down now. That's all they do. They go up, they go down. Your job is to find out, where do I feel safe putting my money? If you want to do it yourself, because not everybody wants to do it themselves. Some people say, here, you do it for me. Give it to a money manager, an account manager, or someone to do it for you. There's nothing wrong with that. You have to decide, and it's your decision. Do it yourself or give up accountability. All right, so anyway, let's zoom in, see what's going on right there. The last 30 days. Now, I'm a little fickle with this one because, like I said before, I'm looking for consistency and profitability. Okay, 30-day high was here. She drops, shoots back up, but comes back down again. New 30-day bottom. Well, I want 3 days to the upside. Well, this one, that's a big jump from 104 to 114 in one day. So 2 days, 3 days. So Wednesday or Thursday, probably not. Not enough profit there. Because see, we lost out right there. Because this is where we're starting and there's not much more room. And we need 2 more days to the upside. All right, next. Finn, I'm doing good. Thank you for the question. All right, so let's go down here. You up early. Thank you, Twan. L Rover, no dividends. Thank you. I got to get out of the rat race. Phil Collins, I agree with you 100%. Okay, I got out of the rat race early. Okay, I retired, I think it was 59. I retired at 59 because I found that 1% every week. Oh, hold tight. XRP fresh. I see that. Hold tight for a second. As I was saying, I got to a point where 1% every single week paid all my bills. And I've already put in 5 decades. Like I said, my first job was in 1974. Some of you weren't even born then. But 1974, my very first job, until 2024. Oh, wait, 2023. 49, 50 years. Fine, I'm done. Okay, 50 years, I think it's plenty. Okay, Zevi Rira, can I message you? Yes, you can. Right here. You're on TikTok. Go to the top left-hand corner, click on that, and send me a direct message. Send me your number, and I'll give you a call. We'll have a chat. Wealth Wrangler, how are you doing today, brother? Pascal, good morning, good morning. Who hold XRP just like I do? Now, there's nothing wrong with XRP if that's what you want to do. Now, XRP was specifically designed to fit the need. So, what you're doing with XRP, I have no idea. I don't do it because it doesn't have weekly options and it doesn't have 20 years of profits. Now, in 18, 19 years, maybe it will. Maybe I'll look at it then. But as I said before, I'm 62. Every trade that I do has to be safe and predictable. I have no desire to go back to work. Good afternoon. Welcome to Walmart. Will that be paper or plastic? No, that's just not me. I mean, because nobody ever wants to admit they're getting older and you just can't do what you used to be able to do. Okay, I'm 62. I realize I can't do what I used to do in my 20s and 30s. Okay, this just does not work the way it used to. So I have to do with what I have. In my younger days, yeah, I would have done XRP and I would have done other things. But now that I'm retired and I only have a certain amount of money, that money has to be safe. It has to be invested for a predictable and consistent return. That's why I like the 1% every single week because it works for me. All right, over here, what do we have, you guys? Okay, Mike wants to take a look at SLV. SLV for Mr. Mike. Try it again. One SLV. All right, interesting. But before we dive deeper into this, I want to go to Yahoo Finance because Yahoo Finance will tell me just how profitable SLV has been. All right, let's move that out of the way. I think this is it right there. There we go. Let's put in SLV. Now, for you guys who don't know what I'm doing, let me briefly explain while this thing is working. Okay, behind me, the screen. This is Yahoo Finance. Now, Yahoo Finance will have all financial data that you're looking for. Now, you can use Google Finance. You can use New York, NYSE, New York, Securities Exchange. You can use the Dow Exchange. You can use whatever financial website you want. I use Yahoo Finance because it allows me to see the dividends. It allows me to see book value. It allows me to see earnings per share. It allows me to see revenue per share. It allows me to see the financial details of the company. So, SLV, there are no dividends in this time period. So, for me, a dividend is a little tiny green spot on the calendar. Let me go back to it again. Let's pull up a better set of companies. All right. These little green dots, those represents the companies that I'm interested in. You either have it or you don't. Again, two choices. Has it, doesn't have it. Yes, no. That's what I'm looking for. So no to SLV. Sorry, no dividends. No thank you. Mike, you should know better than that. Target, Mike, that's a great one. I love Target. Now, if you didn't know, Target, TGT, is a dividend king, which means 5 decades of consistent profits. Whether you shop at Target, whether you agree with their politics is totally irrelevant. Whether you like it or not, they have consistently increased their profits for 5 decades or more. I don't play politics, okay? I don't care what the company does. I only care, are they consistently profitable or do they offer weekly options? That's it. I got 2 things I'm looking for. Consistently profitable, weekly options. That's it. Either you're consistently running the company properly and you're making money, more money this year than you did last year, more money last year than the year before. Don't forget about ET. Yeah, XRP. You're not going to like what I say about ET, but I'm going to get to it. Hey, he wants to take a look at energy transfer. Now, I don't like energy transfer, and here's why I don't like it. Okay, let's go. 14. All right, are you ready? Right? All right, here's the current price, 1875. Look at the chart. High, low, where was it? Where is it? Look at this. Down, up, down, up, down, up. Okay. I don't buy at the high, number one. Let's zoom in. Okay. 30-day high. Yeah, no thank you. But worse than that, take a look at this. The premiums. At the money, nice return. One strike out of the money, adequate. But once you go 2, 3, 4 strikes out, 1 penny, 0, 0, 0. Now that's very important because stocks go 2 different directions. They go up or they go down. So if it goes down, you're putting in a sell order for 3 to 4 strikes out of the money. What are you getting for energy transfer? 1 penny, 0, 0, 0. Yeah, I don't do energy transfer. There's a few of them that look like this. They have a bunch of zeros. So why would I buy something and try to sell it and get zero return for it? It just doesn't work for me. That makes sense? Okay. Champion 44, how you doing? XRP facts. Don't forget, we did that one already. Merv, hello. L. Smith, love target. Let's check a look. Uh-oh. Uh-oh. Lift Warrior is asking about the Qs. Now, you're not going to like what I have to say about the Qs, but before we do that, let's do target. Okay, because target did come up first before the Qs. TGT, whether you like it or not. Uh-oh. Uh-oh. There you go, TGT. There it is. Okay, not quite where I want it to be. A little too close to the high. All right, let's go through it. You ready? High, low, where was it? Where is it? Down, up, down, up. Yeah, I don't buy at the high. It's not a place for buying. It's a place for selling. Okay, you buy low, sell high. I don't buy high and wait and wish and hope it goes higher. Now, I like target, I do. But I'm going to write target down for 2 weeks because in 2 weeks, okay, hypothetically speaking, in 2 weeks, it should drop back down again after profit taking. Now, here's a funny thing about profits. Uh-oh, it's already written down. So apparently, I already wrote down target. All right, what did we have next? Oh, Lift Warrior wants to take a look at the Qs. I'm not even going to pull it up here. I'm going to go directly to Yahoo Finance and tell you exactly why I don't like the Qs. You're not going to like this because I can almost guarantee you weren't paying attention. Is it QQQI or is it QQQL? Oh, it's QQQI. Okay, here we go. You ready? Neo NASDAQ High Income ETF, QQQI. Okay, what we're looking at specifically is called the data stream. The data stream houses all the data. Okay, we have the dates. Okay, and what we're looking at are the dividends. Because if you know, the dividend is a portion of the company's profits. I know the Qs is not a company, but they are an entity in which you invest in, and they do give you a dividend. So call it whatever you want. You put money in there, and they give you a return. Whatever you want to call it. It's an ETF. Big deal. You're giving your money to a computer. Electronically traded funds. Yeah. I know what ETF means, but think about it. Exchange traded fund is what it is. But you take a look at those exchanges, they're all computerized. So you're basically giving your money to a computer and say, give me what you think I deserve. You ready? Lift Warrior, let's go back as far as we can and look at that. Okay, we want to look at 20 years? No, this thing has 2 years. Think about it. You're giving your money to a computer that has been running for 2 years. Very first dividend, February 21st, 2024. That's the first dividend from QQQI. That's only 2 years. We haven't even gotten to the full 2 years yet. On the 21st of February, it will be a complete 2 years. It's not, okay, hold on. 2 years, you want to do that? Fine. Let's take a look at the numbers. Are they increasing consistently? Let's find out. 59, 60. That's increasing. Then it went to 58. That's decreasing. Now, hold on a second. When I say I want consistent profits, that means the number should get higher. 1, 2, 7, 9, 15, 18, 27, 32. Consistently higher, not going backwards. 59, 60. That's higher. 58, that's lower. 61 higher, 62 lower, 61 lower, 64 higher, 60 lower, 61 higher, 61.2 higher, 62 higher, 62 higher, 62.4, 61.4 lower, 58 lower. It goes up, it goes down, it goes up, it goes down for 2 years. Can't make up its mind. Are you going to be consistently profitable or are you not? Okay, now for those of you who don't know what consistent profits look like, let's look at this, TGT, and let's go back 20 years. Okay, 20 years. Uh-oh, I went back too far. 06, 06. There it is right there. 2006, $1. Okay, follow along. 2006, $1. 2007, wait a minute, sorry, 10 cents, 12 cents, 14, 16, 17, 25, 30, 36, 43, 52, 56, 60, 62, 64, 66, 68, 90, 108, 110, 112, 114. Did you notice every single year that number went higher and higher and higher and higher? Qs don't do that. Qs have been around for 2 years. That's it. I got to change this right here. 1 second. There we go. Close battery. All right. Cotton Express. Don't need a securities license to give advice. Okay, Cotton Express. I'm not giving advice. I'm giving an observation. You asked me about a stock. I put it in here. I read the numbers. It's not advice. It's an observation. Big difference. This is for entertainment and what do you call that? Education. Okay? You want to get a good conversation? Drop me a phone number. We'll have a good conversation. And no, you do not need a securities license to read numbers off of a chart. Now, if I was to tell you, you need to buy this, that is giving advice. My advice to you is to buy this. No, I don't do that. Okay, I'm giving an observation. Somebody want to take a look at Target? Great. Here's Target. Here are the numbers. All I'm doing is reading the numbers off the board. I'm not giving advice, but you are right. I'm agreeing with you, but I'm also disagreeing with you. Okay, you do need a securities license to give advice. I am not giving advice. I am making observations. You ask me about a stock, I pull it up, I take a look at the numbers. I'm reading from a board. That's all I'm doing. Okay, so Rajut Halil wants to take a look at CEG. Isn't CEG? Hold on. I know this one. What is CEG? Um,
James,
yes.
we can see your screen for the Think and Swim, but when you go on Yahoo, we don't see it.
Oh, that's right. I was supposed. Thank you. My fault. I was supposed to share. Anytime I change screens, I have to change the sharing. You're 100% right. Sorry about that. So back to the chart again. Let's make sure we're on the right one. Yep, we're on the right one. Sorry about that. Remind me next time. Anytime I change screens, I have to change screens through the app, not just on the screen. Okay, so Rajid Hill wants to take a look at CEG Constellation. Okay, look at the numbers. Okay, the top, the bottom, where was it? Where is it? Look at down, up, down, up. That looks awesome. The top's here, pulls back here, the retracement. Great. Let's zoom in a little closer. A little closer, last 30 days. Here we go. 30-day top, 30-day bottom. Now she's bouncing. The 30-day top's up here. 30-day bottom's down there. Look at all that space. No, that is not advice. Just an observation. Bottom's here, top's here. Look at all that space. Just an observation. Okay? Don't try to get me in trouble. See, I've been playing this game long enough. I try not to give advice. Well, I do give some advice. You ready for this? Here's some great advice. If you're driving in the car, don't stick your head out too far. It might go home in another car. That's some good advice. All right, anyway. Top, bottom, retrace. 288.43. What are the numbers? If I'm buying it at 288.43, I'm going to sell the 287s and they're paying $8. So you got a couple of questions. Question number one, does that make sense? Question number two, do I like this company? Question number three, can I picture myself buying this, holding it, consistently getting weekly cash flow until it hits my target? Well, if I buy it at 288.43 and I sell it for 287.50, that's less than what I paid for it. I'm selling it for less than what I paid for it, and I'm still walking away with a profit. How the hell does that work? Okay, 288's purchase price. Sale price would be 287. I'm picking up 860 in premium. Let's do the math, see how that works out. Let's get rid of this. Let's get rid of this. Okay, let's pull up covered call. Let's go to the 287.50 right there, one contract. Now, for those of you that are new here, and those of you that cannot see this, okay, this screen behind me, oh, I need a, hold on, I got to tap into here. Okay, here we go. The screen behind me, covered call CEG 287.50. Okay, 790 is the profit, 27,000 is the investment. Let's walk through it and see, does it make sense? You should always ask that question. Does it make sense? Do I like this company? Wow, we got a lot of questions over here. Sit tight, you guys. All right, so Lift Warrior, do you see what I'm talking about with QQQI? Not consistently profitable, number one. Number two, it's only 2 years old. When I put up two fingers, that means 2 decades. That's 10, 20 years, not two, 20 years. I want 20 years of consistent profits for me to consider putting my money into anything. We'll look at GEV in a second. All right, we already did ET. When you get bought out, do you buy again next week? Tommy Gunn, what I do is every single Monday, I weigh the pros and cons of all those companies that have a dividend coming up. Because just before the dividend is paid, the stock has a tendency to increase in price. And by knowing that one fact, okay, I should say all of them, most of them go up just before the EX date. So if the stock goes up just before they pay a dividend, why not jump in and take advantage of that situation? Jump in at a certain price, sell at a certain price, jump out. Right now, we're taking a look at CEG and figuring out how the heck can we make money if we sell it for less than what we paid for it. That's what we're looking at. Purchase price, $288.43. Sell price, $287.50. That's less. But I'm walking away with 790 and putting up 27,000. Now here's the thing. When I sell it, I'm getting all my money back along with the profit. It's already there. The computer does all the work for you. What's the order? Buy one covered call, CEG, 20 February, this coming Friday, the 287.50, which is less than the current price. Okay. Max profit, 790. Cost of trade, including commissions and fees, 27. So let's get the calculator. Calculator, profit, 790. Investment, 27,960. That gives a rate of return for 1 week, 2.8% for 1 week. But here's the question. Do you like this company? Does it make sense to you? Is this someplace you want to put your money? I can't answer those questions for you, and no, I don't give advice. You are responsible for anything that you do. So you got to make sure it works for you. But I'm going to save this one because 2.4% for 1 week, that makes sense to me. Constellation Energy. I should probably have it with all the other energy stocks. Okay, over here, put it right there. Let's take a look at it on the big board. So for you guys who don't know, the screen behind me is live streaming on YouTube. So if you can't see all the little tiny numbers, go to YouTube and check it in there. All right, so here we go. There it is, Constellation Energy. One covered call, CEG, 20 February, 287.50. The purchase price, 288.55. Profit, 790. Investment, 27,960. 2.8% for 1 week. Actually, for 4 days. Because the option expires this coming Friday at 3:59 p.m. It doesn't. It expires on Saturday. But at 3:59 p.m., you got 1 minute to do something or forever hold your peace. Because after 4 p.m. on Friday, you and I can't do anything. Now, the option does expire on Saturday, just in case you were wondering. So, 2.8. Let's save this one. Whoops. 2.8. There we go. Next. So, CEG actually looks pretty good. Cotton Express, thank you for that. Beach Wendy, how are you? Make it happen, see? How now in Jax? Cool. Smelly Shop. Interesting name. Okay, we already did Energy Transfer. When you get bought out, do you buy again next week? Yes, I do, but I always looking at what is coming up next because it changes every single week. Okay, we look at the same stocks over and over and over again because they do the same things over and over and over again. Now, most people stay away from dividend stocks, especially the old ones, because they grow so slowly. I'm not looking for growth. I'm looking for consistency. Are they doing the same thing consistently? Are they doing the same thing predictably? That's what I'm looking for. Safety, predictability, simplicity, profitability. I love the Lee family. Wonderful Lee family. Yes, they are. Now, let's keep on going. Cash out. How are you doing? Macedas. Okay. Joe Ruggies, CB. Zabrighter Life Design. How are you, Zabright? Aaron Multisports. Good morning. I'm part of your VIP group and I sent you a message. Cool beans, Aaron. Thank you. The HUD 6. Good evening. Crystal Gutierrez. Thank you. Tony, how you doing? Steven, I just rolled Johnson & Johnson for $18,000 gain this morning. Well, actually, no, you didn't because the market's not open. So, but, I see what you're coming from. Is General Motors a dividend aristocrat? No, it's not. A dividend aristocrat is a company that's consistently increased for at least 25 years. Now, General Motors has been in business for over 100 years. They're not always the greatest with running the company, but take a look at the numbers. Seriously, take a look at the numbers for General Motors. The stock price is almost equal to the, the book value. Now, the book value is the price that if they had to liquidate everything, think of a garage sale or estate sale, you sell everything. The book value is if they sold everything, what would you get? Also, take a look at revenue per share. How many shares do they have? How much money is coming in every single year based on those numbers? So you take a look. You know what? Let's take a look. We're in no hurry. Let's take a look at GM. Okay, GM. Now, what we're doing, going to Yahoo Finance, right here on the lower left side, statistics. Okay, we were looking at historical data. Okay, the dividend is going up, not as much as I would like, but look at the statistics. And look at the statistics. You're going to find this interesting. Okay, look at General Motors statistics. Okay, here we go. The stock price, General Motors, 81.08. Okay, profit margin 1.4. That kind of sucks. But look at this. Revenue per share. Okay, how much money do they have coming in for each share that they own? Where is it? Revenue per share. $193 for each outstanding share. 193. The stock price is only 81, but they have $193 coming in for each outstanding share. Let's go down to the book value. The book value, $67 per share. If the Supreme Court calls up General Motors, says, you need to liquidate and you need to pay off all your investors. What are you getting for your 81 bucks? You're getting $67.61 because that's the actual value of the company in hard assets. Now let's take a look at NVIDIA. Hot stock. Everybody loves it. I don't. Okay. NVDA. Okay. NVIDIA is at this moment $182 per share. Okay, let's slide down. what is their revenue per share? Okay, are you ready for this? Revenue per share for NVIDIA, $7.97. Let's call it $8. It's $182 stock. The revenue is $8, 792. Sorry, 767. $7.67 revenue per share. Hold on, it gets worse. Check this out down here. Current book value, $4.89 a share. So give you a rough idea. Supreme Court calls up, says, yo, you need to divest and pay off all your investors. Guess what you're getting for your $182? You're getting $4.89 because that's all the company is worth in hard assets. It's all it's worth. And you want to make matters worse? Check this out. The dividend, 4 cents. You're paying $182 for a 4-cent dividend. That's 1 penny every quarter for every share that you own. What is that rate of return? 0.02%. It's not 1%. It's not 2%. It's 0.02% for the year. Explain to me why anyone in their right mind looking at these numbers and say, ooh, I got to buy me some NVIDIA. Because it's a growth stock. They take all the profits, put it back into the company. What do they give you and I? They give us nothing but a promise that, hey, maybe it'll be worth more when we get older. Maybe. Terribly sorry, I don't want to take that risk. These numbers to me don't look very good at all. I like the numbers for General Motors and Ford. Okay, granted, they're not dividend king or dividend aristocrats, but they have been in business for over 100 years. How long has NVIDIA been in business? And is NVIDIA the only one doing what they're doing? No, because NVIDIA is in competition with Tesla. It's going to be a difficult time overcoming him. That boy's got a lot going for him. What else? NVIDIA is in competition with India. Not India, India. They're trying to figure out AI also. So aren't the Russians. So aren't the Germans. Everyone's trying to figure out this AI thing. Okay? Cars, Ford, General Motors, they've been around for over 100 years. AI, eventually someone's going to be put out. I'm not investing for 0.02%. Hell no. But check the numbers. Never, remember rule 1? Never buy something you do not want to own long term. It just doesn't make sense. If you're stuck with something, why would you want 1 penny return? 1 penny every 90 days for each share you own. And that's $182 per share. And it's only worth $4.47. Sorry, $4.89. Anyway, I don't like NVIDIA. I only like companies that are consistently profitable to the numbers that I like. Don't forget ET. We already did ET. Marv, thank you. I love Target. Okay, I'm going to agree with you. Thanks. Cincinnati, thank you. Uh-oh. XRP Fresh wants to take a look at GEV. Who the hell is GEV? Never a good sign when I can say, who the hell is that? GEV. Well, let's take a look. $800 a share? Holy cow. All right, let's take a look at historical data. How often have they increased their profits? GE Verona Inc. Historical prices. Okay. Historical prices. Dividends only. I want to take a look at all the dividends. Okay, maximum. All right, here we go. I want to go. That's it? 2 years? $800 a share and I'm getting a quarter? Hell no. What the rate of return is that? Statistics. Let's go to statistics. All the way down. Oh, yeah. That makes sense to me. 0.16. 0.16. Not even 1%, not even a half a percent. That's 1/10. Well, it's a little bit over 0.1%. Hell no. What the hell do you think? Who came up with GEV? XRP Fresh. Did you even look at the numbers? What's the book value? $41. It's an $800 stock and it's only worth 41. Think about it. The internal, not the internal revenue service, who is it? Supreme Court says, hey, you need to divest, you need to pay back your investors. You're getting $41 for your $800 stock. What's the revenue per share? How much money are they bringing in? Revenue per share. All right, where is it? Right here. Revenue per share, $139. It's an $800 stock. It's only bringing in $139 per share. The numbers just ain't right there. So I'm going to say no to GEV. Sorry. XRP Fresh. Oh, yes. LUV. That's Love It Field. Hold on. Don't tell me. Southwest Airlines. LUV. So let's go back. Put in LUV. LUV. Am I right? Okay, hold on a second. Rick, we're going to take a look at that in a minute. LUV is Constellation. No. LUV is Southwest Airlines. Okay, check it out. The high, the low, where was it? Where is it? Look at this. Up, down, up, sideways, up, down. What's going on there? What's going on the last 30 days? Okay, 30-day bottom, 30-day top. Now it's coming down. Wait another week or two. Southwest Airlines. Rick had a question. What do you got, Mr. Rick? Mr. Rick. Here we go. Mr. Rick. Okay. Rick, unmute yourself and speak up. All right. Mr. Rick, you still with me? All right. Sign in when you're ready. LUV, we looked at that one. Okay. Paul, how you doing? Paul says dividends in the morning. Yeah. Lift Warrior, thank you. Walter Monroy. Good evening, or good afternoon, good morning. Brian, Ravi, Robert, Daniel. Ooh, Medtronics, MDT. That one, I believe, is a dividend king. Is it? MDT. Unfortunately, take a look. 30-day high, and she's dropping. Now, don't put it out, because as she's dropping, she will find a new bottom and turn around if you like Medtronics. But wait, don't be impatient. Okay, 30-day bottom, she shoots up, 30-day high, you got your profit taking. When profit taking is done, it will turn around, go back up again. Lee Spanner. Altria. You're right, Altria does have great dividends. MO, Altria is a dividend king. Hell no. You see that? I don't buy at the high. Last 30 days, look. She was at 55. She shot up to 68. 55 to 68 is 13 bucks. 13 bucks on a $55 stock, that's over 20%. Yeah, no thank you. Okay, it's not a profit until you take it. No, don't get me wrong, I love Altria, I really do. But now's the time to take profits, not to jump in my humble opinion, and that's all it is, just an opinion. Okay, what do we have over here? What platform are you using? Pimpin' Ain't Easy. Ooh, I like that movie. Pimpin' Ain't Easy. Who's in that movie? Anyway, besides the point. What platform am I using? This is called Think or Swim, and it's through Charles Schwab. Ken, OCCI. Ken, what the hell is OCCI? OCCI. Offs Credit Company ORD. Two reasons I'm saying no. One, it's at the bottom of the year. If you really like it, wait for it to turn around. Two, no options. I'm looking for weekly cash flow. The only way I'm going to get weekly cash flow from this thing is to sit in front of my computer all day. No, thank you. Okay, rule number 4, weekly options only for me. Daniel wants to take a look at Blackstone. BK, Blackstone. BK, wait a minute. BX, sorry. BX. BK is something else. Blackstone, not quite there. Okay, take a look. 30-day high, 30-day bottom. She went up and then she retraced. Didn't quite do what we wanted it to do. If you like it, wait. Okay, the bottom is here. Look at all that space you got. As soon as she decides to turn around and go up, jump in. But at the moment, no. Derek, good morning. Melvin, Micron, you say, huh? MU. No. Way too high. Advanced micro devices, huh? AMD. Okay, that looks kind of interesting. All right, we don't need to see all this. Let's go back to 8. Last 30 days. 30-day high, 30-day bottom. She jumped, stalled out. Not quite there. Daniel, Duke Energy. Duck, goose. There we go. DUK. Hell no. 2 reasons why it's a no. Are you ready, Daniel? Why 2 reasons it's a no? Number 1, it's at a 30-day high. What's the play? Seriously, if it's at a 30-day high and we're looking to profit 1%, why are we buying it at the high and hoping it goes higher? Now, it could, but I don't want to play that game. And number 2, February, March, April, June, July, blah, blah, blah. It's a monthly. I don't do monthlies. They just don't work for me. That's why rule number 4 is weekly options only. Let's grab a seat and see how many more questions do we have. All right. Uh-oh. IBB wants to take a look at Nike. NKE, Nike. Interesting. Not 100% sure where it looks like it's going because it doesn't look like it's really going anywhere, but here's the high, here's the low, here's where it was, here's where it is. Follow the bouncing ball. Are you ready? Up, down, up, down, up, down. Don't look that good, does it? Well, let's zoom into the last 30 days because the last 30 days gives us a good idea of where do we think it's going next. 30 days ago. Okay, down, up, down, up, down. Looks like it's going up, but as you can see, it is going down. So wait a little bit. As soon as Nike finds its bottom and turns around, maybe. Okay? What do we have next? Ooh, Mandalese. Daniel, Mandalese, MDZL. MDLZ. Mandalese, no. Same thing, dude. Same thing. Look at this. Why are we buying at the high? Think about it right here. Go from the bottom of the year. Okay, the bottom of the year is at 51. She shoots up to 62. 51 to 62 is 11 bucks. 11 bucks on a $51 stock is about 20%. 20% move. You take your profits or you don't. Okay, if you bought it down here and now it's at here, that is a 20% profit. And here's the thing about profits. It's not a profit until you take it. It looks good on paper, but if you don't take that profit, it's not really a profit now, is it? The same thing with losses. You don't ever lose until you agree to sell for less than what you paid for it. All right, what else we got? Joe Ruggles, thank you. Thank you. What else do we have here? Holy cow. Ooh, a lot of questions. Ooh, Charlie. Boy, you guys got a lot to say. All right, where are we? Good morning, great part. Okay, got that one. Okay, we looked at that one. We looked at that one. We looked at that one. QBTS. Ricardo, what is QBTS? QBTS. D-Wave Quantum. Okay, interesting, but let's check and see how consistently profitable they are. QBTS. I'm going right to the dividends and see how they increase consistently. Historical data. Okay, historical prices, dividends only. Oh, look at that. Ricardo, there are no dividends. So, Ricardo, I got a question for you. The name of the show is Dividend Stock Talk. Dividend. So the word's right in there. The subtitle is Dividend Investing for Weekly Cash Flow. QBTS has no dividends, so why are we looking at it? Cotton Express stocks can go sideways too. Well, it looks like they go sideways, but they still go up and down. Okay? Now, take a look at this. Okay? Do you see any sideways movement? Because in my opinion, sideways is that way. Okay? Down, up, down, up, down, up, down, up, down, up, down, up, down, up. There's no sideways moves there whatsoever. Stocks go two directions. They go up and they go down. That's it. You got 50-50 shot. Is it going to go up today or is it going to go down today? Yep. They go up and they go down. That's it. UPS. I like UPS. I do. UPS. The ups dudes. Hell no. Don't. Okay, Joe. Don't get me wrong. I like UPS. But why are we looking at it? It's at the high. Yeah, no, thank you. Okay, that guy wants to do energy transfer. Okay, I don't like energy transfer, and I only told you why. Skip deck, no dividends. Exactly. So that guy, I already explained why I don't like energy transfer. When. It's not if, it's when. When the stock goes down. Okay? Take a look. A year ago, energy transfer is at 2050. It goes from 2050 down to 14. Okay, it went down, it went up, it went down. Now it's going up. Okay, why would I buy at the high? Take a look, zoom in. Last 30 days. 30 days ago, we were here, and now we're up here. Do you remember the old saying, make money in the stock market, you buy low and you sell high? Why would we buy high? Rick, what's your question, Mr. Rick? You got to unmute yourself. Yeah, I see that, Rick. Okay. Rick, you got to unmute yourself and speak up. Rick, I know you're there. All right. How's Snot Texas Instruments? Hold tight, Texas Instruments. Whoops, back over here. Texas Instruments, TI. Well, TI is not Texas Instruments. What the hell is Texas Instruments? TXT. Is that it? TXT? No, that's Textron. Who knows what Texas Instruments is? It's not TI. Why not sell a put? How now in Jacksonville? You know what? Absolutely, I'm going to agree with you. Selling a put before you buy is a great strategy. TXI. TXI. Texas Instruments. There we go. Wait a minute. Texas Industries. No. Texas Instruments. TI. No. TI. Whoops. TI is Telecom Italia. That's TI. TXN. Thank you. The B guy. TXN. That's right. TXN. There you go. Texas Instruments. No, it's at the high of the year. Yeah, no, thank you. I don't buy at the high. So anyway, how now in Jacksonville? Why not sell a put? You can. Think about it. You can do whatever you want. What I'm showing you is the strategy I created for my 9-year-old daughter. Now, I know a lot of strategies and I can show you a lot, but that's not the purpose of why I'm here. I want the simplest, safest, most predictable trading strategy available for my children and my grandchildren when I am gone. I have no delusions thinking that I'm going to be here for the 50, 60 years. I'll be lucky if I get 30 out of this little trip here. So when I am gone, what's my grandchildren going to do? What's my great-grandchildren going to do with their money? I want them to be able to not have to worry about. That's all it is. One less thing to worry about. Well, if my children, grandchildren know how to invest and get a nice return, that's one less thing for them to worry about. That's it. One less thing to worry about. Anyway, what else do we got? So Texas Instruments, no, I don't buy at the high. Okay, no. Don't get me wrong, I love the company. It is on my list. And again, now, how now in Jacksonville? The only reason I'm not explaining puts is how do you explain puts to a 9-year-old? Calls are easy. Calls give you the right but not the obligation. Puts are obligatory. Do you understand that? Buy a put, sell a put, you're obligating someone to buy or someone to sell. You're forcing them to do something. That's not something I want to teach a 9-year-old. Granted, she's 26 now, but that's besides the point. How do you know that stock will continue going up? Okay, so Moan, we don't know. The only thing we can do is look at historical performance. Okay, now elementary common sense tells you, hey, it's going up. You follow the trend. The trend is people are buying and it's going up. And it will continue to go up until it's done. That's it. How do you know it will continue going up? It will go up until it's done. And then what happens? It turns around and goes down. Because that's what they do. They do two things and only do things, Moan. They go up and they go down. That's it. Up, down, that's it. Does the owner know about this page? Oh, the largest. Does the owner know about this page? I'm not quite sure what that means. Does the owner know about this page? What page are we talking about and who's the owner? And why are we asking the I don't have no idea what that means. Does the owner know about this page? Can somebody clarify that for me? Because I know what the words mean, but in this context, I'm totally clueless. I messed up and bought Siller 82. Okay. His main page, I know, is Dividend Stock Talk. My main page is the 10-minute trader. Okay, if you do some research, the 10-minute trader was first incorporated, oh my God, I think back in the early 2000s. So if you do your research, the 10-minute trader, you'll know goes all the way back into the early 2000s. Okay, Dividend Stock Talk is only about 3 years old. But the 10-minute trader, where is it? I have it up here. Okay, right here is the 10-minute trader. Okay, the10minutetrader.com. Do some research. I don't hide anything. I've been online since the early 90s where we had dial-up modem and we had to pay by the minute to be online. Okay, when I first started trading, it was $250 commission to buy and sell. If you want to buy a stock, great. It costs $250 for the commission. I remember when they dropped down to 125. I was so excited. And then they dropped down to 70, they dropped down to 60, they dropped down to 50, they dropped down to 30. Now we're free. You can buy and sell stocks for free. The only thing you have to do is pay the exchange fees. What are they? A few pennies for each trade? But think about it. I've been doing this for a long time. I own both. Yeah, I do. Thank you. Yeah, SLV, silver. I don't do silver because it doesn't pay weekly dividends. It doesn't pay off. Wait a minute. This getting old stuff is no fun. Let's get out of this. Where are we? SLV into the, what do you call it? Yahoo Finance. So let's check it out. Okay. SLV has no dividends. That's why I don't buy it. Because the dividend allows me to see the predictability of the movement. Because stocks move predictably just before the dividend. SLV doesn't have it. Now, SLV is paper silver. It's not real silver. Okay, so when push comes to shove, you're not getting the silver, you're getting the cash equivalents, which might be what you're looking for. I don't know. Okay, Anton. Anton wants to take a look at Zim. I think I have a problem with Zim. ZIM. I love my new computer. It's so quick. Everything's quick. My old computer, I've had it for like 8 or 10 years, but hey. Okay, here we go. Zim. All right. I don't know what looks attractive about this, but let's take a look. Okay, number one, the first dividend was paid in 2021. That means it's only 4 years old. Anton, 4 years is not 20. I'm looking for 20 years of dividends and increasing dividends. Let's take a look. 2. Holy shit. It goes from $2 to $2.50. That's a 25% increase. Then it goes from 250 to 17. That's a huge jump. Let's call that a special dividend because they do have those once in a while. 285, 475, 295. That's almost a 50% drop. 640. It goes from $6.40 down to 23 cents. $6 to 23 cents. How the hell can you tell me that's a good investment? Because think about it in my point of view. I'm retired. I rely on dividends. I rely on cash flow coming in. Okay, I'm getting $6.40 April 4th, 2023. $6.40 dividend. The very next dividend goes from $6.40 down to 23. Then it goes to 93, then it goes to 365. I'm going to say no. There's no consistency, there's no predictability. No, no, and no. A lot of people copy people's on social media. I'm going to agree there. All right. Zim was a no. The largest. I was making sure nobody is copying you. Terribly sorry. There's last my count was 65. 65 people are pretending to be me. All right. So before I go on any further, let me just tell you, if you think you're having a conversation with me, email, Snapchat, text message, um, Instagram, Telegram, any one of those, yeah, it's not me. I don't do that. You want to have a conversation with me? Either go to the website, sign up for a conversation, book a call, or just drop your phone number and I'll call you personally. I get no problems talking to people, and I can guarantee you 100% I'm not going to try to sell you anything if I call you. Just a conversation. That's it. Think about it. You want to have a conversation with someone who's been doing this for a long period of time? If you ask me a question, I'll give you the answer. But you got to remember where I'm coming from. I'm 62. I'm retired. I'm looking for simple, safe, predictable, consistent profits of 1%. That's all I'm looking for. Do not try to sell me on the new hot topic. I don't care. Okay? I'm what you call a Gen Xer. We're in that certain time frame. You've heard about us. We honestly really don't care about your feelings. And I don't want that to sound bad, but it just is what it is. Okay? Think about this. I was in 5th grade. Can you imagine a 5th grader? What, 10, 11 years old? I get off the school bus and I jump into the back of the pickup truck of Old Man Simmons. And Old Man Simmons would take us to the woods and we'd chop firewood. Okay, we'd go to the farm and we'd take care of the cows, the pigs, and the chickens. We would take care of the tomatoes, the what do you call it, and the blue Hubbard squash. These things were bigger than me. That's what we did in 5th grade. Didn't even come home until dark. My parents didn't care. My father was gone. It was just my mother, single mom of 5 kids in the 60s and 70s. Okay, my youngest brother was born in the 70s, so that was 6 of us. So anyway, think about that. 5th grader gets off the school bus, jumps into some guy's truck, and goes off into the woods. Me and Bruce. Okay, Bruce was the guy a couple streets down. No, not a couple streets down. There was the oh my God, who was that? Murphy's lived at the top of the hill. Parkman's lived next to them, and we were 2 people down from the top of the hill. Okay, so me and Bruce would jump in and we go to work. We make $5 working from, was it 3 o'clock until 7 or 8 o'clock? Yeah, but back then, back in the 70s, that was a lot of money for us. because, I was 10 years old. No, my mother had no clue where I was, nor did she care. Okay, so it was totally different growing up back then. I cannot picture my 10-year-old son going into the woods and chopping firewood. Can't imagine that at all. But for us, it was perfectly okay. Okay, so I grew up differently. So don't think whatever you're thinking is going to equate to what I'm thinking. I grew up totally differently. Okay, yeah, we were on government assistance. We were welfare babies. Okay, my father left in the 60s. My mom raised all of us by herself. Okay, she's in her 80s now. All right, then, Swede Bank or Anton, you got to give me ticker symbol. I haven't heard of either one of those. And number one, is it a company that's consistently profitable here in the U.S.? Because I haven't heard of either one of those. What else do we have? Hoops, how you doing? Cotton Express, stocks go sideways. Okay. Cibawo. Okay, we looked at that one. Nope. Ooh, the HUD wants to take a look at Oracle. Now, I do have me some Oracle. Okay, right there we go. ORCL. ORCL. Oracle. Ooh, I like this. Do you hear that? When's the last time you heard me say, ooh? Okay, check it out. Ready? The high, the low. Where was it? Where is it? Look at this. Down, up, down, up. That's an awesome move right there. Not the bottom of the year. The bottom of the year is 120. We're at 140 and we're bouncing. Let's zoom in and I'll show you exactly what I'm talking about. Last 30 days, check it out. 30 days ago, we're at 205. We dropped down to 135. That's a big ass drop. Now we're bouncing. You can't not see it. Does that make sense? You can't not see it. High, low, now she's bouncing. Check it out. Right now we're at 160. The 160 is going for 480. That's more than 2%. Let's take a look. I actually own some Oracle. And no, that is not a recommendation. It's not a tip. It's an observation. I'm observing that the top is here. I'm observing the bottom's there, and it's bouncing up. Okay, don't misquote me. It really pisses me off. I don't give advice. I make observations and I share them with you. Okay, so at 160. All right, let's do a covered call. Remember, we got to change this right here. And for those that are new here, if you can't see it, go into the top left corner or go to YouTube. It's live on YouTube under the 10-minute trader. Okay, where are we? We're changing it from single to covered because we want to be covered. We want to be safe. Or I want to be safe. I don't know about you guys. I want to do the 160 and it's going for 155. I want to do just one contract so you understand what one contract is going for. And you ready? Here's Johnny. Buy one covered call Oracle. 20 February. That's this coming Friday. It's 4 days away. The 160 call option. Ask yourself this question. Pause for a second. Ask yourself this question. If the stock is currently at 160 and 40 cents, I'm selling it for less than what I'm paying for it. 160. I'm collecting 455. I got to put up 15,000. Now think of it this way. If I'm going to buy a vending machine, a new vending machine is what, 15, 20,000 bucks? Put it on the corner, street corner, Main Street in Spring, wherever. People walk by, they throw money into it. I come by once a week and take money out. Same thing. I am buying a weekly cash producing asset. That's why weekly options only. Weekly cash producing asset. I'm putting up 15,000. Remember rule 2? Never ever sell at a loss. So when I sell, I'm getting all my money back. And every week I'm collecting a premium. This week the premium is 455. Let's see what rate of return that is. Calculator, 455 profit divided by the investment, 15,545 gives me a return of 2.9. 2.9% for 1 week. Ask yourself the question, does it make sense? Do I like the company? Is the company bouncing off the bottom? Is it trending up? Is it trending down? Where's it going? Do I like the company? What do I think the future of the company is going to be? These are all very important questions that you need to ask yourself. Daniel, do I mentor? Yes, I do, Daniel. But, Daniel, I promise I'm not going to try to sell anything. So, you want to ask me a question, drop me your number. I'll give you a call. Okay? You're not going to hear me try to sell anything. I mean, I could, Daniel asked, but I'm not going to. I'm not here to sell anything. I'm sharing information. You want to talk to me one-on-one? Fine. Drop me your phone number. I will personally call you. No, I'm not going to pass you off to someone else. I do my own phone calls. Okay? I don't do text messages. I don't do emails. I don't do WhatsApp. I don't do Telegram. Phone call. I'm admitting I'm an old dude. I am. I'm 62. I remember dial-up phones. Okay? Now, we were so poor, we couldn't afford a phone. So the phone company came in and put a pay phone. I shit you not, there was a payphone at my house. Growing up, there was a payphone. If we wanted to make a phone call, we had to come up with a dime. Guess what? We didn't have any dimes. We were so poor. Now, I'm not giving you the bullshit story. I had to walk to school uphill both ways. Well, it was uphill both ways because to go to school, we had to go uphill and then we went downhill and then we went up another hill to get to the school. On the way home, we went downhill, then went back up a hill, and then we go back home. So, yeah, I did go uphill both ways coming home in the snow. All depends on your context and perception. Okay, you're standing at the bottom of the hill, you got to climb up it. Okay, on the way back, guess what? You got to climb up it on the way back. So, yeah, I did climb uphill in the snow both ways going to school. It all depends on how you look at it. You look at it the other way. Yeah, I went downhill to get to school. On the way home, yeah, I went downhill to get to school, get home from school. Same thing. All right, where are we? Thank you there, Brandon. Mia Lee, thank you. Daniel, do I mentor? Yes. MJ, I have DM. I really interested on stocks, but I don't know anything about them. Actually, MJ, you do. You know more than you think you do. You're just trying to talk yourself out of it. Let me explain. Driving down the road as a kid, you look outside. What do you see? Arby's, McDonald's, Wendy's, Friendly's, Texaco, Citgo, British Petroleum. Hold on, Exxon Mobil. What else do you see as you're driving down the road? Prudential. You probably see the Prudential building or an insurance company. You've probably seen Ford, General Motors, Home Depot, Lowe's. These are all companies that you see just being a passenger in the car. So by owning a part of that company, you are entitled to a part of their profits. And that's all we're doing. We're putting our money into companies. Wait a second. I'm going to save this one, 2.9. You bet believe I'm going to save this one. So all you're doing, Daniel, is you're taking your money and you're taking control of it. Okay? Because you got two choices. Learn to do it yourself or give up accountability and let someone else do it. Okay? Because at some point, think about it. At some point, when you are retired, your money's coming from somewhere. All the money you accumulate on your way to retirement, the golden years, someone is investing it for you. Either that, you're sticking it under your mattress. Don't laugh, because there's an old guy right across the street from my friend Stanley. Okay, an old guy. He died, and the firemen and the policemen found a huge amount of money stuffed in the mattress. Okay, so yeah, they do that. All right, so where are we? Oh, we're saving this one. And there it is right there. Whoa. I went the wrong way. There it is. No! I got to redo that one. Get rid of that one. Let's redo it because it didn't come out right. Why didn't that come out right? All right. All right. That's what we want right there. Save up here. Saved. Hold on, it's going to pop up. We're going to save this one. What did we say it was? 2.9? Should be right by here. There it is. And there we go, right there. Oracle, 20 February. That's this coming Friday, 4 days away. The 160 call option. The stock right now is at 160.35. 455 is the profit. 15,000 is the investment. Now remember, you never, ever, ever lose money until you agree to sell it for less than what you paid for it. Think about it. Why the hell would you agree to sell something for less than what you paid for it? That just makes no sense. Okay? So 2.9%, we're going to save this one. $2.9. Whoops. Point. Okay. Next. What do we have next? Let's get all the way back to the beginning. Now, Rick, I hear and I see you have your hand up. Okay?
Yes,
yeah, great. You're muted. All right. What you got there, Mr. Rick?
so I need to share my screen. So now you'll be doing those Zoom calls like you do in the nighttime, also at the daytime,
No.
like with the
No,
YouTube and everything, or just
no,
today?
Rick, the only reason we're doing this today is because I have a habit of doing it every day. Monday, Tuesday, Wednesday, Thursday, Friday, and the market's not open today. That's the
Right.
only reason we're doing it this way today.
Okay.
Okay, you want to share your screen? You do think
I can,
okay, everyone's going to
but
see it. There's about 2 or 3,000
yeah,
people here.
we'll do it tomorrow because the market is closed today, so we'll do it tomorrow.
All
I
right.
think
Just to let you know,
okay.
anytime you got a question, unmute yourself and just speak up.
Perfect. Thank you, sir.
You're welcome, Rick. Okay. Next. I've DM'd you. Okay, got it. Anton, thank you. What else we have here? No, it's a Swedish bank. It's a Swedish bank. Great. Wonderful. Do they trade on the U.S. stock market? And if so, what is the ticker symbol? And do they have weekly options? Okay. Batty with a fatty. Okay. Don't get in tizzy. That's her name. Okay, that's the name she put up, so I'm just calling her by her name. Batty with a fatty. Way to go. Can I message you? Yes, you can. Go to the top left-hand corner of your screen. You'll see it right there. The 10-minute trader. Send me an email. I'll call you personally, me. Okay, make sure you put your phone number in because I don't text. Because there's so many scammers out there that will text pretending to be me. That's why I say, send me a phone number. I will call you personally. That way you know it is me. Okay? All right, so what do we have? Sunny Funny, how much do you charge to mentor and consult? Now, like I said, I don't try to sell anything here. I'm not going to try to sell anything. I'm not going to give any numbers. You want to have a conversation? Drop me a number. I'll give you a call. And I promise I won't try to sell you anything. I will answer some of your questions for you and I will give you my opinion. That's it. It's not advice. Okay? Brandon Odell, how are you? Thank you for that. Tin Man. All right. Where are we? Where are we? RA. So I buy Oracle now. I turn around 1 minute later and do a covered call if I like the stock correct. Well, here's the thing. I'm going to be very careful what I say because I don't want to get myself in trouble. If you think Oracle is right for you, if you think it makes sense to you, you are responsible for your choices. Do your research and ask yourself, do I like Oracle? Does this make sense? Am I okay with tying up my money in Oracle for however long it takes to reach my goal? Well, I told you what my goal is. Simple, safe, predictable, 1% every single week. I do own some Oracle. I'm not telling you to buy Oracle. You have to make up your own mind. But if I bought Oracle tomorrow morning, 160, I would turn around and I would sell it for 160 and collect whatever premium they are offering me, which is, give me a second, The 160 premium is 480. Now, some simple math right at the top of your head, 480 is more than 2% of 160. It's all simple numbers. Remember, it was created for a 9-year-old. And for some of you who don't know who the 9-year-old is,
Hi, I'm Jason, and as you being part of my internet website club thingy, which my dad doesn't like me calling that, I'm calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that help you get the best return on your money.
sorry, there she is.
List number 1 is stocks that are paying out each year.
There's over 20 days. That's me. That's my daughter when she was 11. Now, she asked when she was 9, so after this, it's been 3 years we've been doing this.
There's a different company paying out dividends.
That's my favorite part.
Anyway, serious.
Okay, the only reason I show you that is that was my daughter when she was 11. She asked me when she was 9 in 2008. Well, in 2008, they didn't have the internet the way they did in 2011. So this here you're seeing, we videotaped that. Remember those big, huge VHS cameras? They were like this big. They were huge. Put it on a tripod, press play, back and forth, till we got it right. 16 years ago, that was done. Look all the hair I had. It was no gray either. Anyway, the reason I'm showing you this, I've been doing this for a while. It was created for my 9-year-old daughter, which that's her right there. Okay? Normal, average, everyday girl. Daddy, can you teach me? Simple, safe, predictable, consistent, and specifically for her, no way for her to lose. The rules are simple. Never buy something you don't want to own. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and then make sure all the numbers work. What am I buying it for? What am I selling? Is it more than 1%? Do the charts tell me it's going in the direction I want it to go? Okay. 30-day high, 30-day bottom. Now she's bouncing up. I love that. That's what I look for. I look for a good company. I love Oracle. I think they have a great future. I'm okay with putting a small amount of my money into Oracle. And every single week, grab a profit, whatever the premium is, as long as it's 1% or more. That's what I'm looking for. Let me change the screen again. So you have to decide, number 1, does it make sense? Number 2, is this something that you think you can do? If a 9-year-old girl can do it, I'd like to think that you can do it. Because the funny thing is, you cannot get to this channel unless you're over the age of 18. Because I do have age parameters set for this content. So ask yourself the question, does it make sense? Do I like this company? Can I picture myself doing this? So what other questions do we have? Mike, thank you there, Mr. Mike. MJ, thank you. Lena Lorena, message me, let me teach you how to earn from crypto and Forex. If you don't mind, I'm just going to block your account because, I don't do that, and I don't like it when people do that. Sorry, Lena. MJ, so you only this money when you sell something less than what the price was. No, MJ. It's a numbers game. What am I buying it for? What am I selling? Is that more than 1%? Do I like this company? Am I willing to hold on to this company? Do I feel safe investing my money in this company? Those are questions you need to ask. So you only lose money when you sell something for less than the price you bought it for. Yeah, that kind of makes sense. Think about it. If I buy Oracle at 160.14, okay, I will sell it at 160 because it's paying 480. It means I'll walk away with 160.480, which is a lot more than I paid for it. And I get that on day one. I don't have to buy the stock and wait for it to move. Remember I said simplicity, predictability? I know what my profit's going to be before I even do the trade. That's why I like this trade so much. It's simple, it's easy, and it's predictable. All right, what other questions do we have? MJ, thank you, MJ. Okay, thank you. All right. MJ, you only need to ask the question once. You asked it 4 or 5 times. Moanne, how to know the EX dates of the companies on the website calendar doesn't work on Apple. What we're doing in the background, what you don't see, I actually have someone in the family that's creating what's called a Google sheet. Same thing as a dividend calendar. You put whatever stocks you like in there, it goes right onto your phone, and it will you just look it up. What stocks are available this week? And that Google sheet will tell you exactly what stock's coming up that week. So, or you can go into Google and write in EX dividend calendar, and it will show you where to get an EX dividend calendar. I use the one that's attached to my Charles Schwab account because that's all Charles Schwab stuff. That's nothing to do with me. I just use it. Sunny Funny, could you sell a cash secured put on Oracle instead if you don't own it? Oracle, yeah, you could. Okay, what is a cash secured put going for? Now, I don't normally teach these, but take a look. Currently, stock's at 160. The 160 is going for 455. So you could buy the stock, sell a covered call, and get your 2.9%. Great. Or you can sell a cash secured put. Cash secured put means you got to put up a bunch of money, basically the exact same amount if you do a covered call, and you get almost the exact same return. But if the stock goes up, the covered call would get taken away from you. You get all your money back and you keep the profit. Same thing with the put. If the stock goes up over 160, that option expires worthless and you get to keep all that money. Either way. But if the stock drops, okay, you get on the covered call, you keep the profit. On the put, you now have to buy it at 160. So if it dropped to 150, you got to buy it at 160. Yeah, you get a couple of bucks to offset the price, but it is what it is. So make up your mind. Do you want to own the company or do you not want to own the company? Oh, I get it. So this means if I know how to manage my stocks, I can be able to make a profit every week. MJ, exactly. But make sure the stocks you pick are the ones you want to hold on to long term. How to know the EX dates of the companies on your website calendar doesn't work. I don't have a calendar on my website. Okay? The EX calendar is right here on Thinkorswim, which is offered by Charles Schwab. Okay? The EX calendar tells you all the little stocks that are paying dividends this week based on your parameters. So, yeah, all these right here have increased their profits for 25 years. Those are the ones I'm looking at. What else do we got? Ooh, all right. How'd you know we already did that one? Oh, user 4259 say that's not true. You do realize I've been speaking for 2 hours. So what specifically is not true? Because I don't want to say anything that's not true. So what do you got? Okay, user 4259205304981. Okay, your parents couldn't name you Tim or Tom or Patty or Teresa. They had to name you that. Anyway, Celsius, L Franks, you got to give me the ticker symbol. Wes, WWR, why not 30 days? Will, what are we talking about on 30 days? All righty. I got all these questions that I missed. That's a lot of questions. I did UPS. I did Oracle. TSX. What the heck is TSX? TSX. Oh, Direction Daily Top Semiconductors. Yeah, 2X ETF. No options. No, thank you. Okay. Just sell Q's covered call weekly. Buy a course, sell a course. Okay, let's take a look at the Qs and let's see how profitable the Qs actually are. Okay. Okay. Q, Q, Q. So we're going to Yahoo Finance. We're going right to the dividends and see how often has the dividends increased for the Qs. Because think about it. It's an ETF, okay, electronically traded funds. You're giving your money to a computer to trade for you. And I know it's an exchange traded fund. Don't get your panties in a wad. But think about it. The exchanges are all electronic, which means they're all computerized, which means it's an electronically traded fund. You're giving your money to a computer, and don't try to convince me otherwise. All right? So let's take a look at the profits that the Qs have been offering for the last 20 years. Maximum, here we go, all the way to 2026. And here we go. Now, I'm going to do this one at a time so that you can understand, okay? Buy a course, sell a course. Pay attention closely because most people don't want to be shown that they're wrong. But if you think the Qs are great, let's take a look at the profitability. 2006, 2.9. That's the first one. 2.6. Now, I don't know where you went to school, but I do know that 2.6 is less than 2.9. So that went backwards. Hold on. 2.3. Same thing. 2.3 is less than 2.9 and it's less than 2.6. So Qs are going backwards at this point in time, back in 2006. Hold on. It gets worse. Okay, so from 2.3 goes up to 5.4. Okay, 50% increase. Okay. 2.7 down, 3.7 up, 2.6 down, 5.3 up, 3.3 down, 3.4 up, 2.8 down. Do you see what's happening? It's going up, it's going down, it's going up, it's going down. No consistency of profitability whatsoever. I don't do the Qs because they're not consistently profitable. Now, if you're retired, you need consistency in your profits. You need to know how much is coming in on a weekly or monthly basis. If I get a dividend for $1,000 this week, and then next week I get a dividend of $800, that's a 20% drop. Yeah, no thank you. No consistency, no predictability, no thank you. I don't do the Qs. It's actually that simple. If it's not consistently profitable, no thank you. Okay? But thank you for that. Buy a course, sell a course. You and I should chat because I'm trying to put together a course. You'd think I'd have one, but it's so old it needs to be updated. Cleod MSI, TSX. What the heck is TSX? Okay, TSX into Yahoo Finance. Oh, no, there are no dividends in the time period selected. Now, we looked earlier, there's 10,934 companies. Why would I invest in TSX if it has no dividends, if they don't share the profits? You got to remember where I'm coming from. I'm retired. I don't want to buy something and watch it grow. No, I need cash flow. That's what I'm doing. Okay, user 425920. So your answer to the question, that's not true, is another question. What's my net worth, big guy? You do realize that makes no sense. Net worth makes sense. Net worth makes no sense whatsoever. But here's the thing. What about Amazon? Amazon's not profitable and Amazon doesn't have dividends. Sorry. Okay? So let's keep on going. QBTS. What the heck is QBTS? QBTS. D-Wave Quantum. Same question. There are no dividends. Why should I be concerned with it? Ricardo Rodriguez. Okay, no dividends, no thank you. Plain and simple. I try to like keep things as simple as possible. Thank you, thank you. Rebel Girl, good evening. Blah blah. Your favorite dividend that pays monthly. Okay, blah blah 777. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. Luke, you do realize Tesla has no dividends. Rajit Hali, thank you, you're welcome. Luke, retail. I don't think retail is a stock. Coca-Cola. Now, don't get me wrong, Coca-Cola is a dividend king extraordinaire. Basically, let's get rid of this one. Okay. Let's put in Coca-Cola. K-O. Coke. Whoops, that's the wrong one. There it is. Coca-Cola. Now, Coca-Cola has been in business for over 140 years. And yes, they are a dividend king extraordinaire. However, it's at an all-time high. No, thank you. And 78, 68 means I'd be doing the 79s, and the 79s are only paying 60 cents, less than 1%. So no, I don't do Coca-Cola. In the 30 years, that I've been trading, I bought Coca-Cola twice. Because very rarely does Coca-Cola pay over 1%. Once in a while they do. Mooney Crockett, Chris, AWR, American Waters, monthly. AWK. What is AWK? AWK. American Waters. Wait a minute. I thought AWR was American Waters. American K, it is. American Waters. Okay? American State Water Company. That's the difference. American State Water Company, and it's a monthly, and it's a no. I don't do monthlies. We already talked about that. AWK. AWK. American Water. So one is Americans Water, and the other one's American Water. Okay, still monthly. I don't do monthlies. Sorry. All right. Stealth Defense Utility. Yeah, it's a water company. They provide water to the Northwest. Yeah, they get close to 1 million customers, but they're still a monthly. I don't do monthlies. Luke, I love Microsoft. It is a dividend aristocrat. Let's put it up. MSFT. Okay, but not this week. There's the high, here's the low, here's what it was, here's what it is. Look, it's down, up, down. Okay, 401. The 400's going for $6, but it's falling. I don't buy until it bounces off that bottom. Look, 30-day top, 30-day bottom. She bounced up, pulls back. So it's still coming down. Not quite time, in my humble opinion, for Microsoft. One Love, CVS. Ooh, now that's kind of interesting. Top, down, up, down. Now she's going up. What does that look like? The gap already filled. We talked about this a couple of weeks ago. Look at the last 30 days. Okay, here's the top. Here's the bottom. Right? Look at that. That's called a gap. And that gap had already filled. Okay, bottom here. Now it's there. See? It filled. But she's still going up. 78.50 to 79s are going for 95. So yeah, we still have all that space right there to go. Here's the bottom. Here's the top. We're here. Smack dab in the middle. So yeah, it's going up. It has more room to run. What do the numbers look like? Well, let's find out. 78.48. Let's do the 79s for the fun of it. Covered stock. 79. There it is. One contract. La 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 la. There we go. Okay, let's take a gander. Here it is. One covered call. 20 February this week. 79. It's currently at 78.75. So yeah, the 79s would make sense. 151. I'm putting up 7,700. What's the rate of return? Freeloader 20. Only 1% a week? Yeah. 1% a week is over 50% per year. And I'm pretty much okay with a 50% return per year, considering I'm retired. I want a safe, predictable, consistent 1% every single week. That's what I'm looking for. You need to ask yourself what makes sense to you. Okay?
We have a mess.
Lovely. All righty then. Anyway, let's wrap this up. It's 11:30. I've been here for 2.5 hours. Let's see what else we got. So Phil Collins, you've been here a bunch of times, and I told you, drop me your number. I'll give you a call and we can chat. I mean, I can take a look at your situation and give you ideas. I can't tell you what to do, but I can give you ideas. Okay? Netflix next time. CVS, it came up pretty nifty. Oh, what's the numbers for CVS? Let's check this out real quick. So 151, we want to divide it by the investment, which was 7,700. 77.49 to be exact, and that is a 1.9 for 1 week if you like CVS. $1.9 CVS. I'm going to save this one. What is this? Number 4 for the day? Yep. 1, 2, 3. This will be number 4. I like to do 5. Can we come up with one more? Anyone? Here we go. CVS, 20 February. The 79 call option, 151 is the profit, 7,700 is the investment, 1.9% for the week. If you like CVS. I'm saying the same thing over and over again. Okay, Moanne, we looked at UPS already. Okay, I don't remember exactly what we came up with. I think it was a no for this week, but maybe next week. I don't know. But I'll be on later on tonight at 9 p.m. so we can look at it again. So 1.9 for CVS. No, I hate it when it does that. It does that once in a while. Give it a second. It'll pop back up again. But while we're waiting for that, let's get rid of this stuff. Get rid of that. Let's go back to this, and back to that, and there it is. There it is. $1.9. All right, I need one more. I like to do 5 a day. Let's get one more. What are we looking at? What about nail? Sunny Funny, what is nail? Seriously. Nail. No. Okay. I don't buy at the high. AFL, Aflac, Moan, I love Aflac. It is a dividend king, if you did not know. No. Look at where it is. No. All right, what else do we have over here? Luke, how are you? Odom. Freeloader, 1% a week is 50% per year. I'll take that anytime, okay? OCCI, Ken, where we looked at that was a no. QBTS, where we looked at that, that was a no. Big C, how are you doing? JB22. Uh-oh. User 23031423077760. Why couldn't your parents name you Tim? Think about it. Tim, Jets. What the hell is Jets? U.S. Global Jets ETF. Okay. Take a look. Perfect example of what I'm talking about. 30-day bottom, stock shoots up. 30-day top, stocks drop, people take profits. Not the time to jump in my humble opinion. Just my humble opinion. That's all it is. Riven, no. I know for a fact Riven has not been around for 20 years. Okay? EQPT. Jamie, never heard of it. EQPT. Equipment Share Com INA. I have no idea what that means. But it's going to be a no because I don't do monthlies. Okay? Weekly options only. Sorry, Jamie. Ricardo, QBTS is a no. Chris Emerson. Ankalac. Okay. DPRO. What the hell is that? DPRO. Dragonfly. No, I don't do monthlies. Blah, blah, 777 IONQ. I actually have some of that. IONQ. Interesting. Take a look. IONQ. 30, the high of the year, bottom of the year, where it was, where it is, it's down, up, down, up. What's going on here? Let's zoom in. The last couple of weeks. 30-day high, 30-day bottom, not quite fixing itself. Now, I already have IONQ, so yeah, I'm curious what it's going to do. QBTS, we already said no to. WWR, I have no idea what that is. WWR. Westwater Reserve. Okay. I'm going to say no. Now, the only reason, West, I'm saying no to WWR because at 88 cents per share, I'm finding it rather difficult to believe this has 20 years of increased profits. I could be wrong, but 98 cents? What the hell kind of option are we going to get? And look at the option premiums. 0.0000. No thanks. Okay, nope. Will, why not 30 days? Because on a 30-day option, the numbers just don't work for me. I want 1% a week. And then you got to figure out where's the stock going to be in 30 days. It's hard enough to figure out where it's going to be in 5 days. Okay? Hold on, let me show you something real quick and see if you can figure it out. Trigar, never even heard of them. Okay, here's a monthly. Okay, this is why I don't do monthlies. Are you ready, Will? 30 days ago, we're at 820. We dropped to 780. Oh, let me get out of this way so you can see better. We're at 820. We dropped to 780. We shoot up to 9, pull back to 840, shoot up to 940, pull back to 869. Okay, now tell me, where is this going to be in 30 days? Here's your options. 5, 750, 10, 1250, but look at the premiums you're getting paid. 0, 0, 0. So I don't like monthlies, number one. Number two, it's a challenge to figure out where it's going to be in 30 days. And number three, what are the numbers you're being paid? I don't do monthlies. They just don't work for me. That's it. They may work for you, but they just don't work for me. All right? Celsius, Frank, you got to give me the ticker symbol. WWR, we already said no. DVN, ooh, Peter, DVN, I like that one. Moan, Microsoft, Italia. Are you buying and selling your stocks dailies, weekly, or are your strategy buy and hold? No, Italia. I buy on a Monday. I sell my options 2 or 3 seconds after I buy the stock. That option deteriorates until it expires on Saturday. So whoever buys the option from me, they have 4 days to make up their mind. Buy it from me at the agreed upon price or let it expire. That's it. Okay? Let me pick a good one. Okay? Here's Macy's. 30 days ago, we're at 24. We dropped to 20. We shoot up, pull back. Now we're going back up again. Great. If I buy, I'm paying $21.63. I get two choices. Sell it at $21.50 for 53, which is over 2%, or sell it at 22, pick up 32, which is 1.5%. I get the choice to do what I want, but whoever buys the option, either the 21.50 or the 22, they have until Friday, the 20th of February, to decide what they want to do. Okay? They either exercise it, let it expire, whatever. It's their choice. But for me, I wouldn't buy Macy's unless I wanted to hold on to it long term. And if I do hold on to it long term, is it offering me some kind of money every single week? Well, this week, 2160, 2150 is paying 2%. The 22, one strikeout, is paying over 1%. 3 strikes out is paying 17. 4 strikes out is paying 10. 4 strikes out, I'm still getting 0.5%. 0.5% is still over 26% for the end of the year. Now, is it always going to give me 0.5%? No. It goes up, it goes down, it goes up, it goes down. People usually buy a stock just to collect the dividend and hold for years. This is just a little twist to get a little bit more money. That's it. Nothing magical, no magic beans, no magic potion, no incantations, just a simple TGI fizzing. X, that's US Steel. Now, US Steel was one of our great companies we did last year, but it got bought out and it changed to a monthly. Okay, US Steel was great last year. It gives it awesome premiums, but then they got bought out. Now they have monthly, and I don't do monthly, so I don't do US Steel anymore. Hey, check that out. Viewers with red badges are part of members of your fan club. Woohoo! All right, so let's keep on going. AVGO. Isn't that Broadcom? AVGO. It is Broadcom. Okay, unfortunately, Broadcom's going to be a no this week only because the numbers. Take a look. 30 days ago, we're at 350. Okay, 360 is the high. 295 is the bottom. She shot back up. Now she's pulling back. Give it another week or so if you really, really like Broadcom. HD, Home Depot. Gladiator, you like the vibe? Cool beans. Thank you. Okay, HD is Home Depot. That is on the list. Johnson & Johnson, that's on the list. AVGO, that is on the list. Thoughts on Mara? Now, I do own some Mara, even though it doesn't fit. Burn. Apple EX dividend date is Friday. 1% return in the 225 call. Okay, but do you like Apple? AAPL. What I like about Apple, check this out. Hold on, Kern. It doesn't look that great at this moment. Look, down, up, down, up, down. That doesn't look that great. You know what looks really good about Apple? Burn, check this out. Okay, we're going to go right here. We're going to go right there, and we're going to take a look at this. This, my boy, is called a seasonality chart. Totally different than everything I showed you so far. The blue represents the movement of this current year. This year, 2026. The red, in this situation, represents 10 years average movement. Take a good look at Apple. You buy Apple in January, it does nothing but go up into December. That's 10-year average movement. That's what it normally does year after year after year. Apple goes up every year. Historically. That is historical information, which means 2016, 2017, 2018, 2019, 2020, all piled on top of one another. 10 years of data. This is the average movement. Buy in January, it goes up by the end of the year. That's if you like Apple. Do I have to sell before expiration work, or how does it work? Aaron, basically the way it works, let me see if I can simplify this. Try to simplify it as best I can, because after all, it was created for a 9-year-old. All right? Now, I'm not insulting your intelligence or anything. I'm just saying it was created for a 9-year-old. That's all I'm saying. Here's the thing, Aaron. If I buy it first thing tomorrow morning, based on what we're looking at, I'm paying $255.78. Wherever you jump on the merry-go-round, that's your price. So from tomorrow, after you buy it, until you sell it, your entry point is never, ever, ever, ever going to change. $255.78, that's your entry. If you buy it tomorrow, that's your entry. So no matter what happens 3, 5, 7, 10 years from now, your entry is always going to be the same until you buy more and that changes your dollar cost average. Okay, you buy it higher, it's going to change your dollar cost average. You buy it lower, it's going to change whatever you own it at. So once I own it at 25.77, sorry, 255.78, whatever I buy it for, I have the right to sell it. Now I could sell the 255s and pick up 480. Sorry, 440. Okay, that's over 1%. I can do that every single week until I sell. And that is a choice that you get to make. And if it is above 255.78 come Friday, whoever bought this option here has the right to take that stock from me and give me back all my money. So I never lose money as long as I never ever sell for less than what I paid for it. And you should never buy something unless you always, always, always want to hold on to it. Jerry Barry, do you ever double down on the same stock if the numbers work? Jerry, it's always the same. What did I buy? What did I sell? Where is it? Where is it going? And what should I do? Those are questions I ask every single day. What did I buy? What did I sell against it? Where is it now? Where does it look like it's going? What should I do? It's not that difficult. Remember, it was created for a 9-year-old. A lot of people have a tendency to overlook that. The strategy that I'm giving you for free was created for a 9-year-old. Simple, safe, predictable, consistent, no way to lose if you do it right. 5 simple rules. Never buy something you don't want to own. Never sell at a loss. Make sure the company's profitable. Weekly options only. And make sure the numbers work. That's it. What do you do if there's a crash? Mo Ann, let me enlighten you. Because you are deciding to play in this game. Before you decide to play in this game, you should take a look at the history of the stock market. Okay, the history of the stock market, it started in 1607. The first dividend stock was sold in 1602. Okay, and the promise was very simple. You give us your money, we will share in our profits. That was the original promise. So that company, the VOC, the very first dividend stock in the current stock market that we're talking about at this moment in time, because there have been other attempts at a stock market, but this is the one that lasted over 400 years. 1602 was the first dividend stock sold. The stock market first established in 1607 in Amsterdam, and then it moved over here in the 1700s. But it's still the same. You buy a good quality company and they will share in their profits. That's it. And if you take a look at all those 400 years, you will notice the stock market goes up, it crashes. It goes up, it crashes. It goes up, it crashes. Over the last 100 years, I think we had like 14 corrections, crashes, pullbacks, whatever you want to call it. Stock market goes up, it crashes, it comes back down again. It does it all the time. That's why I say buy a good quality company. What is a good quality company? A company that has lasted throughout the years, through all the thick and thin. Think of it this way. Companies that are over 100 years old, what have they seen? World War I, World War II, Vietnam, Korea, the stock market crashes of 29, stock market crash of 87, the stock market crash of 2000, stock market crash of 2008, and the stock market crash of 2021, and the stock market crash of 2024. Is a pullback, correction, crash, whatever you want to call it, every decade. You just got to make sure you get a good company that's going to last through the next crash. Take a look at Coca-Cola. They've been around for 140 years, and they still consistently increase their profits year after year after year. They're called dividend kings. They're called dividend aristocrats. They're called dividend champions, dividend contenders. Companies that are consistently profitable through thick and thin. All the crap that the economy is thrown at us, they are still profitable. Those are the companies that I like. What else do we got? All right. Do I have a double down? Yeah. Aaron, are you a good runner? Well, I'm 62 years old and I still play soccer. I still get out in that field and run around with those 20 and 30-year-olds. Some of them will say I'm pretty damn fast for my age. I think they'll all say that. They call me grandpa, by the way. And no, I'm not the oldest person on the field. I think the oldest person on the field was 74. 74 years old, and he still gets out and plays soccer once in a while. I love Walmart. We'll have to look at that next time. Nice video, thank you. Burn, thoughts on the next call up versus next call down if it is slightly higher return. Okay, Burn, it's going to be a personal choice. Anything you choose to do, it's going to be a personal choice. Number one, do you like the company? Are you okay with putting your money into that company? Does it make sense? When you're selling a covered call, when you buy the stock and you own it, okay, if I bought Apple at 255.78, I can do whatever I want. Okay, I can sell the 250s, I can sell the 265s, but this is what I'm going to collect when I sell those. It's a math problem. What am I buying? What am I selling? Am I got a profit or do I get a loss? It's math. It never changes. What do I buy? What do I sell? 86 is in the house. What's happening, brother? Thank you so much for all the help. I have scheduled a call. All right, Moan. If you drop your number, I'll probably call you today. If you scheduled a call, well, whenever that call is scheduled, I'll call you then. TSM, isn't that Taiwan Semiconductors? TSM. We'll take a look at that next time. We're almost at 12 o'clock, which is 3 hours. Got a split, but we'll be on later tonight for that answer. All right, Gladiator, cool. Cindy Richards. Good afternoon, and how are you? Thank you so much. Okay, got it. Good. All right, let's keep on going. Long term equals 1 week. No. My idea of long term is 1 month. That's my idea. One long term. You have to decide, Aaron. You have to decide what's long term for you. 1 month, 1 year, 1 week, 1 quarter, 5 years, 10 years. What else do we got? Ooh, we got 5 more. ADP, we'll look at it next time. Which one you recommend? I don't recommend anything. My recommendation is education, research. If I said something that piques your interest, do your own research. You should never blindly listen to some bonehead online. Yeah, that's me, the bonehead online, trying to give you something to think about. That's it, just something to think about. Shelley Mullen, good afternoon. Toxic, okay. Chevron or Occidental Petroleum. We can look at it tonight. I've been here for almost 3 hours. I want to call it a day. Mr. Darrell likes spaghetti. SPGI. I call it spaghetti because that's what it looks like. Spaghetti. SPGI. What is SPGI? Hold on a second. SPGI. What is it? It doesn't even give me the name. But, ooh, take a look at that. Hold on a second, Mr. Darrell. Check this out. You ready? High of the year, low of the year. Where was it a year ago? Where is it now? And what's the motion of the ocean? Down, up, down, up, down. What's happening right here? Looks like we have a bottom of the year. And I know you've heard this before. You want to make money in the stock market. Lose my balance. You want to make money in the stock market, you buy low and you sell high. So let's zoom into this. Check it out. 30-day high, 30-day bottom, and Friday, 1 day up. Now, I like 2 days up, which would be tomorrow, maybe Wednesday, but the 409.50, the 410s go 780, that's almost 2%. If you like spaghetti, SPGI, I have no idea who they are, but we look at them once in a while. If you like it and it makes sense, that's just my thoughts on the idea. It's not a suggestion, it's not a recommendation. I don't give suggestions and I don't give recommendations. Well, the recommendation I give is do your own research. Ask the people you need to ask in order to make the decisions that you want to make. You're responsible for whatever you do. Don't listen to me. What the hell do I know? I'm just showing you what I do. What I do and what I know are two totally different things. My goal is 1% every week. Simply, safely, predictably, all that stuff. That's my goal. You guys got to figure out what works for you, what makes sense for you. And don't blindly listen to some bonehead online. And yeah, that's me, the bonehead online. Ask yourself the questions. Does it make sense? Do I think I can do this? Are these companies that I like? Let's keep on going. What else do we got? We only got a couple more to go. I have a Permian Basin Trust with dividends. Truth wins. I have no idea what that is. Permian Basin Trust with dividends. I'm going to admit, I have no idea what the hell that means. Ugh, let's go this. Thank you for your time, Shelley Muffin. Thank you. Mullen, sorry. Shelley Mullen. Sawali. Pfizer. I like I like Pfizer. I do. One Love. BA. Hold on. Boeing. Yeah, no, I'm not looking it up. This is right off the top of my head. Pfizer. Yep. Get it. Seawolf. I got it. WES. Never heard of them. Gladiator. Thank you. T. Blake. What's going on? Gladiator, your number one fan club. Okay, got that one. Passport, Eric. Can you look at Intel? You have the 4750 call. INT. Whoops. TC. Intel 4750. It's at 4679. Okay, check it out. Now, which 4750 do you have? Do you have it for this week, next week, the week after? Intel 4679. You got the 4750s, which are right up here, not that far away, but she's dropping at the moment. Maybe Friday was an up day. Maybe it will turn. Don't know. Oh. PJAC June 47 became the 349th fan in the fan club. Cool. Thanks for letting me sit in. Hey, Mike, how you doing? First time. Welcome. I'm here. Now, Mike, this is an anomaly. I'm usually not on in the mornings. I'm usually on every night at 9 p.m. Eastern Standard Time. Stop by, say hi. Basically boring as hell. Same conversation over and over again. Dooley Drama just got the number 2 viewer badge. Cool bean. Blake, can you repeat the one you said were good that you already checked? Uh-oh. Okay, I'm going to apologize now, Blake. I am getting older, which means I write stuff down for a reason. I'll let you finish that equation off if you would. User 329160, Procter & Gamble. I love. Did you say you liked Apple? I love Apple. But it's not the right time to buy Apple for me. Did you hear that? Not the right to buy Apple for me. Okay? AAPL. Okay? Did you see that? Apple is dropping. Here's your 30-day bottom. Shut up. Now it's coming down. I don't buy until you find the bottom and then it turns around. Same thing. It's going to drop, eventually find the bottom, then go back up again. So I like Apple, but I'm not going to buy it this week. Hard to sell calls on Coca-Cola now. Stocks keep climbing. Yeah, Matthew, I'm going to agree with you. And in the 30 years I've been doing this, I bought Coca-Cola twice. Cousin Astra, what's up, brother? How you doing? User 3562, thank you. Dooley Drama, thank you. Ooh, got the number 1 viewer badge. Good for you. T. Blake, what time you coming on tonight? 9 p.m. Eastern Standard Time. T-Gal, thanks for your information. G-Gal, you're welcome. What do we have down here? Thanks, Steve. What program do you use to analyze the stocks and charts? You're from the UK. How you doing over there? Isn't it nighttime? All right. This behind me is called Think or Swim. It's offered through Charles Schwab. Is this day or 4 hour? L Rover, every chart you see is 1 year chart, 90-day chart, 30-day chart, or the seasonality chart. I don't sit in front of the computer. I don't do hourly charts. I don't do minute charts. It's like I want to be on for 10, 15 minutes. That's it. Then I'll be done. Hey, look at this. 4F98YT says scam. Now, I would understand calling it a scam if I was trying to sell something. but I'm not trying to sell anything. So what's the scam? And I'm not saying anything that you cannot find yourself. The numbers are right there. All you have to do is open your eyes and look. Okay? So anyway, I need a moderator to get rid of people like that. Definitely not a scam. Thank you there, Mr. Steve. Thank you for your channel. You're welcome. I'm here every night. Free, not a scam. Thank you. Yes, scam. No data. I mean, bought data, good scam. Bought data. You do realize that Thinkorswim is through Charles Schwab. You pick any trading platform you want, anyone, and I'll go up against you. I got no problem whatsoever. Definitely not a scam. It's the real deal. Thank you. Time to delete. Back again. I see that. So here's the thing. If it was a scam, I'd be trying to sell you something, which I'm not. And it's not bought data, it's found data. You go to Yahoo Finance, it is free to use for anyone. Okay? And you can go anywhere in the world, literally anywhere in the world, and you ask, all right, hold on, let me get comfortable here for a second. Okay. Invesco QQQ Trust. What was the dividends that were paid? You go anywhere in the world and find out this information. It is all free to find. And I'm not trying to sell it. I'm just pointing out where it is and how to find it and how to digest it. Okay, so the dividend that paid out December 22nd, 2025 was 79 cents a share. That is a fact. You can go anywhere on the planet and say, what was the dividend paid out in December 2025 by Invesco QQQ? Anywhere in the world, and they will tell you the exact same thing. 79.4 cents per share. It's not bought data. The data is free. I'm just reading it. Anyway, don't entertain this dude. He wants attention. Yeah, I get it. I like that James is from my era. Remember the 14XK modem? Yeah, I remember that. And if you're on the phone, right, if you're on the computer and someone picks up the phone or somebody calls, you get booted off. You have to do the whole thing all over again. Okay, not selling to anyone, not a scam. It works. Thank you, T1. Nobody cares your ideas. All right, thank you. Why are you here? Okay. How do I get in contact with you? You're on YouTube. You do realize my phone number is on YouTube. You can text me or you can send me a DM and I'll read it. Topher, thank you. So Wally, Health Peak Properties. You got to give me the ticker symbol, dude. How did you find the seasonality on Apple? Moanne, that's on Thinkorswim. Missed your response. Any stats, fundamentals? Gladiator, which one we talking about? Okay, Gladiator. Remember, I have 8 or 9 different conversations going on at the moment. Missed your response. Any stats, fundamentals? I get all my fundamentals from Yahoo Finance. It's free. Statistics in general. Yeah, it's right on Yahoo. You go to Yahoo, okay? Summary, news, chart, community, historical data, profile, opinions, options, holdings, performance, risk, blah, 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 blah. Everything you need is right there. And it's free. As applied to stocks. Yeah, same place. Yahoo Finance. Okay. Have you ever tried to learn option trading? I have. How do I get in contact with you, Mr. Popo 9? Yeah, go to the, hold on a second, the bio. Okay. In the bio, you'll say it's the 10-minute trader. And just send me a DM, a direct message. Rover, markets about to open in 5. No, markets aren't opening today. Can you repeat that? Dear Liddy, Lair Liddy? Repeat what? What are we looking for on the charts? Now, what I'm looking for the charts is to tell me, is the stock profitable? Is it going up? Is it going down? That's it. Okay? As you can plainly see, the chart will tell you exactly what's going on. 30 days ago, we were here. It dropped. It went back up. It dropped. It went back up. It dropped. It's currently dropping. This is Friday right there, 255. The high's there. Now it's dropping. I don't want to buy it when it's dropping. I want to buy it when it hits the bottom and then turns around. That's what I want to do. The chart will tell me, is it the right time to buy or is it not? How do you feel about Broadcom? We looked at that a little while ago. Can you look at SanDisk? Not now. I'm getting ready to leave. I've been on here for over 3 hours. You are essentially working right now. No, I'm not. I'm just entertaining. If there was a consistent and easy way to make 50% a year, wouldn't that opportunity be arbitraged instantly? Yes and no. Because first of all, you got to find it. Second of all, you got to believe it. Third of all, you got to be in the opportunity to be able to take advantage of it. And then there's a lot of other things that work in place. You have to decide whether or not do you want to take control of your own money. That's number one. And then number two, you have to study and find out all the different trading strategies there are out there, what one works best for you. And then out of the 10,934 companies out there, you got to find which one to hitch your wagon to. What is the status of the boats? Ooh, good question. Status of the boats. The little boat, everything's been put on. What we're looking for next is put it in the, what do you call those? Hold on. The bilge pumps. Okay, those are going to be put on next. The steering's already been done. The pods have been already attached. The motors have been synced. And then what we're going to do is now start putting in the electronics and the that motor on the front. That's the tiller motor. The I'm drawing a blank. Trolling motor. That's what I was going to call it. Trolling motor. So it's being put together. We're trying. Yeah, the trolling one. Thank you, Dooley. Yeah. So everything's being put together, and we're waiting for. It's kind of windy and yucky out, and I'm hanging out with you guys. But today I'll be putting in the bilge pumps, and hopefully we'll be taking it out for a spin before the end of the month. Alibaba. Ooh, Alibaba only has 3 years of dividends. Sorry, Gladiator. All right. So Dylan, CPA. Oh, I should have figured a CPA. I always have the number one question I have for CPAs is how much taxes do you pay? Because it's the job of the CPA is to find every deduction legal to be able to not have to pay taxes legally. That's my first question for every CPA. How many of your clients pay zero taxes? And if you have zero clients to pay zero taxes, I want nothing to do with you because you're missing so much. Because you should be showing your clients how to not have to pay taxes legally. Now, I don't want to get into this conversation because it's off topic. But if you want to have a conversation about it, I'd be more than happy to chat. Nor, how are you doing? No way, man. Do you use short-term VWAP strategy on your trades? You realize I have no idea what VWAP means. Okay, now you got to understand one thing. I'm 62. I have done a lot of things in my life, and everything I have done has an acronym. Everything. Okay, so when I was working in a manufacturing company, we had acronyms, little tiny four letters that we understood what they were. VWAP makes no sense to me at the moment. And what context is it being used? Problem is if it's overvalued. Okay, Michael, I'm going to agree with you. However, if the stock is going down, it's going down. Overvalued, undervalued, overbought, underbought doesn't really mean anything. The stock is either going up or the stock is coming down. You either like the company or you don't like the company. It's very simple. Think about it. You either like the company. Do you like Apple? You either like it or you don't. Okay? I like Apple. Great. Do you like Apple at $255? You either like it or you don't. CRM, T. Blake, thank you for that. All right, keep on going. So, Michael Mulvey, remember that. You're looking at a chart. The chart is telling you where is the bottom of the 30-day period, where is the top of the 30-day period, and what are the other investors doing. At this moment in time, the other investors are selling because the stock is dropping. Okay? Stocks go up until they're done. When they're done, they come down. And then they're done going down, they turn around, go back up again. That's all they do. Why do you want to make it more complicated? If someone wants to buy spaghetti, what they do? Okay, Moan, if you like SPGI, well, first you got to have a trading platform to trade on, whether it's Robinhood, Acorn, Webull. Um, I'm drawing blank at the moment. Whatever trading platform you trade on, you just go there and say, hey, put SPGI in, and you buy it for what you want to pay for it, and you go from there. The strategy I'm teaching is basically for those who have some kind of idea what they want. If you like SPGI, that is a decision you got to make. Okay? And then you call up your broker and say, hey, walk me through how to buy this. Walk me through how to do a covered call. A covered call is so easy, there are literally hundreds of videos available for you to see what's going on, how to do it safely, what are the risks, what are the rewards. These you should do before you do anything. Research, research, research. Learn, education. It's there, it's free. Just look for it and find it. It's not that difficult. What do we have down here? I do nowadays. All right, thank you, Michael. I also use the 9-day EMA, which is the exponential moving average on short-term charts. Good for you. I had no desire to explain that to a 9-year-old. If you have a way to explain to a 9-year-old how to use the exponential moving average, great. You do it. Okay, it was difficult enough for me to get my 9-year-old to pay attention. It was less than 10, it had to be less than 10 minutes and had to be simple, safe, and easy. That's it. Takes investors weeks to go in and out of a trade. No, it don't. It takes you minutes. I could buy it first thing in the morning, and by the afternoon, I can sell it. So think, Michael, before you say something. So I can buy it first thing in the morning, and by the time you finish your coffee, I can sell it with a profit, or I can sell it with a loss. But I don't have to wait weeks to get into or out of a trade. 9-year-olds are easier than a lot of adults. Clem, I'm going to agree with you. The reason being, if you tell a 9-year-old these are the only stocks you're buying, 300, that's it. And then, let's go here, hold on. This will be making things a little easier. Okay? So, for the 9-year-old, are you ready? For the 9-year-old, we are right here. 1, 2, 3, 4. Those are the only ones we're looking at today. 4. Let me see if I name them off. Oh. Archer, Daniel, Midland, ADM, Dividend King, 5 decades increased profits. Aflac, AFL, 5 decades of increased profits. ED, Consolidated Edison, over 200 years old. It's a monthly, I don't really trade it, but still, 200-year-old company, still paying dividends. PPG, again, another good company, consistently paying dividends for at least 2 decades. That's the only thing we're looking at. Now, for a 9-year-old, 10,934 different companies. No, we're looking at 4. That's it. For this week, what are we looking at next week? 2, 4, 6. That's it. Don't complicate things. See, adults want to make things complicated because they want to feel smart. I mean, think about it. Complexity feeds the ego. Oh, great. This is wonderful. I can do this. Great. Wonderful. I made money. For a 9-year-old, simple, safe, easy. Oh, it's going up. Now it's going down. This looks like a good place to buy. A 9-year-old, simple, safe, predictable, consistent. Regardless, this strategy could be easily arbitraged with a smaller pool of money, even if it isn't scalable. Okay, Dylan, thank you. What else do we got? There are no free lunches, definitely not 50% plus safe annualization returns. Thank you again. I got something for you, Dylan. Are you ready? Watch this. You'll love this one, Dylan. Where are we? 10-minute trader. There we go. Okay, top left corner to the burger. We're going to look at trades for 2024. Are you ready? These are all the trades I made in 2024. All there. Okay, take a look at some of the numbers. Oh, look at this. 3.1. Ooh, 0.95. I didn't make my 1%. Oh, boo-hoo for me. I made 0.95 that week. So I suppose you're right. 2.8. 2.9, 2.0, 2.1. That's July. 2.8, 1.1, 3.8, 1.7, 3, 1.2, 2.8, 2%, 0.73. Ouch, that one hurt. Hold on a second. I only made $1,000 that week and it was 0.73. So you're right. I don't make 1% every single week. So let's look at 2025. Here we go. We had 3 accounts in 2025. Let's go down here. Wow, how far down we want to go? All right, how's here? June, look at this. June, 2.0, 2.7, 2.0, 0.59. Ouch. You're right again. I didn't make my 1%. I only made 0.59, $1,100. 1 week. 2.7, 1.4, 0.8, 3.8, 4.4, 4.2, 3.6, 3.1. You know, okay, here we go. Okay, these are what I bought: MRK, MPW, Hertz. Okay, I bought Hertz 687. I sold the 6, picked up 109. Count them up. These are credits: 3, 7, 3, 15, 18, 22. That's all multiplied by how many shares I own. Okay, so Riley right here, 7-cent profit, whoop-de-deal, but 7 cents on 3,100 shares. It adds up. Halliburton, 3-cent credit on 1,000 shares. Was that $30? Big deal. Foot Locker, 1,100 shares at 15. Kohl's, 4,000 shares at 18. Macy's, 1,200 shares at 22. I can go on and on and on. The profits and the losses are right there. 3.6%, 4.2%, 3.1%. Argue all you want. Bitch, moan, complain. Every trade I've done for the last 2 years, all backed up by video, which watching me buy and sell. Okay, let's go back here for 1 second. 2024. Let's go to YouTube. Every single time I buy and sell something, I do a video. There are 1,700 videos of me. 1,700 videos, and not one of them is AI generated. Okay, you can take a look at any one of these things I'm doing. Okay, over 1,700 videos, not one of them is AI. Okay, I've been doing this for a very long time. What else do I have? What else? All right, let's do this. Go down to right there, slide all the way down to the bottom. Right there. Are you ready? Check this out. Starting date. August 31st, 2011. That's when I had my first blog post. And I started posting every trade that I made every single week. Win, loss, doesn't matter. I posted each and every one. I've been doing this for a long time. And to have somebody like you to come on and tell me it's not possible, prove me wrong. Seriously, prove me wrong. Take a decent company, the right time to buy, okay, right time to sell. Does it make sense? Are they profitable? Dividend Kings, 5 decades of profits. Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profits. Dividend Contenders, 10 to 24 years increased profits. That's only about 300 companies. There's 10,934 companies. I'm only looking at 300 because they're consistently profitable. I don't care about anything else. Honestly, I don't care. If it's not profitable and it doesn't have weekly options, next. It's actually that simple. Next, no thanks. All right. It's been 3.5 hours. Holy cow, I'm calling it a day. Agree, disagree, really don't care. I do this every single day, and I really don't care whether you agree or not. Okay, you don't think it's possible? Fine, don't do it. But don't cast aspersions on something you don't understand. If I buy AT&T for $10 and I sell it for $10 and somebody pays me 10 cents, 10 cents is 1% of $10. Or is it a buck? No, 10 cents. It's still 1%. 1% every single week comes to over 50% per year. You're a CPA. You should understand that. Good quality companies, consistently profitable, weekly options only. Only buy it if it's bouncing off of the 30-day bottom at least 3 days up from the 30-day bottom. The rules are pretty simple. It was created for a 9-year-old. And to be a CPA, you have to be over 9 years old. So I'm just saying, if you don't understand it, and my 9-year-old daughter does, I'm not quite sure about your clients. Anyway, besides the point, I'm done. 3.5 hours, more than enough. You guys have a great day. And for you guys on the Zoom call, we're going to do this tomorrow morning at 9 a.m. For the rest of you, I'll be here at 9 p.m. tonight. Sorry that I didn't get to all the questions. I did get to most of them. How about take two? Ooh, I looked at take two. I did. I got my own land and a house, but I don't want it since going in jail. Who wants it? Yeah, okay, I feel bad for you there, brother. How does your house go to jail? I don't know. Guys, you can really measure moves by the penny. Yeah, you can. Thoughts on I like General Dynamics. Alpha decay. All right, you're getting into questions that I don't want to explain to a 9-year-old. So you're under the assumption that I don't know what you're talking about. I know what you're talking about, but I'm only teaching what I gave to my 9-year-old. Okay? As a starting point. It's simple, it's safe, it's predictable, it's consistent. If you do it right, you can make 1% every single week. All you need is a 9-day exponential moving average, 20-day exponential moving average, 200 exponential moving average, VWAP, and pre-market highs and pre-market lows. You do realize that just went over it didn't really go over my head. I have no desire to look at it. But how you would explain that to a 9-year-old? Seriously. If your 9-year-old niece, nephew, whatever says, hey, can you show me how to do it? Less than 10 minutes and to be consistently safe and predictable? I don't think so. Okay, you have a lot of adults that don't understand it, and you want to do the 9 EMA, the 20 EMA, and the 200 EMA, along with the VWAP and the pre-market highs and lows. Not everybody qualifies to trade in the pre-market or aftermarket. We're usually stuck with the market hours. All right, I'm done. You guys have a great day. We'll do this all again this evening. I'm a glutton for punishment. What can I say? All right, there. All right. That being said, you guys have a great day. You guys, I'll see you tonight or tomorrow. Not now. Leave meeting. That works. Okay, you guys here, have a great day. We'll see you next time, which is tonight. You guys here, have a great night. Stop broadcast. There we go. For you guys down here, I'm sorry for the naysayers. I had nothing to do about that. But remember, simple, safe, predictable, consistent 1% per week. Remember the rules. Never buy something you don't want to own long term. Never sell at a loss. Kind of defeats the purpose. 3, make sure the company's consistently profitable. 4, weekly options only. And 5, make sure all the numbers work. Have a great day. See you next time. And you guys here, have a great day, and we will see you next time also. And